and they're moving from Northwest Canada. They took the top of the building. They made a spectacular build-out. I think it's one of the best in the city. It certainly equals space here at Bloomberg, which is terrific space. And they're going to be hiring over 300 people for their new office. This is their first office in New York City.
Yeah.
Fintech is a big mover in the office economy. The other issue that people don't realize is the tech companies start out very small. So, but as soon as they move in, they're expanding. We started what we called a Durst Ready, which allows tenants to move right in, small space, short-term leases, and most of them stay and expand. Some don't work out, obviously, but it's the new companies, the new industries that are really growing in New York. The older industries are just not growing, and that's not an issue.
So I guess what I've learned about the commercial real estate market over the last several years, and I've learned, exponentially what I knew before, is that if you have A quality buildings, and like the Bloomberg building here is an A quality building, if not A plus, fine. Your leased, your occupancies are great. But if you're anything less, B or C, those are challenging, and those are some that people are concerned about the values, concerned about the debt associated with those buildings. How do you see that part of the New York market, the B and C level?
The B levels, it really depends on the ownership and what they've done. We have buildings, I would consider an A minus, not
okay,
B.
okay.
But the first building we built at 655 3rd Avenue, when we built it, it was 200 East 42nd Street, but preferences for addresses changed, so it's now a 3rd Avenue address. It was vacated to about 40% 2 years ago. It's now 80% leased. And as I said, it was built in, if I didn't say it, 1955.
Wow.
And we keep investing in our buildings, keep modernizing them, and that way we add tenants or keep tenants.
So when we talk about in a macro sense, the Fed's going to lower rates, et cetera, what does that mean to you when you're already in a position where your buildings are mostly occupied, you can raise your rents? What does that mean?
Well, it means that the office market is not a monolith. There are buildings that are going to continue to do well and others that are going to fail. But those buildings that don't survive are going to be purchased at a lower cost. People are going to invest in them, and they're going to come back because the office market is continuing to grow and expand. We leased 1 million square feet last year, which is the highest we've leased in the past 6 years. So the office market is good. There are buildings that, because mostly interest rates, when interest rates triple, I think, close to triple, the values go down. And that's if you're financed at 70 or 80%, we try and stay under 50%. All of a sudden, your building is worth half of, or not half, but considerably less than what it was, and you cannot refinance.
So that's kind of where I want to go. What is the lending market like today for commercial real estate? Does it depend? I mean, I assume your relationship with your bankers are very strong, but for the average commercial real estate, how are things out there?
For the average commercial real estate, and even for us, it's very, very tough. The Fed has really clamped down on all commercial real estate, and they do not realize that it's not monolithic, that not all buildings are in bad shape. We had to struggle for some of our loans to let me not put it that way. We had to really push to get our loans renewed.
Right.
And no matter how much we showed that we were in good shape, it's the Fed that's pushing the reserves for banks that make it difficult for them to make these loans.
Before we let you go, are you buying right now?
No.
No.
No, we're continuing to improve our buildings, to invest our money in new buildings. There are a lot of people out there, a lot of these funds, which we don't have at this moment, who are going to be picking up properties. So the market for the buildings that don't work is very strong.
Really great to get your perspective. Thank you so much for coming in, especially on a 100-degree day. We
Yes,
really appreciate that. Douglas Durst, chairman of the Durst organization that resides in my former employment. I mean, we're going back 20 years, but still.
Really?
Yeah,
Okay.
I worked at White & Case. I was a paralegal, man.
Oh, you were?
Oh, yeah. I worked at night. I worked from 4 p.m. until midnight.
Wow.
Yeah.
Okay.
I did really great, amazing things like FedExing documents and faxing things.
Remember faxing.
Because that was still a thing. Page
And look at
checking.
you now.
And look at me now.
Stars,
Things are looking up. All right, coming up, we're going to talk to Glenn Losef. He's a Bloomberg Intelligence Senior Equity Analyst for Healthcare Services on United Health earnings. That stock's still moving. Right now, we go to Michael Barr. Michael?
Thank you very much, Alex. Paul, Charlie, 2 days after surviving an attempted assassination, former President Donald Trump appeared triumphantly at the Republican National Convention's opening night with a bandage over his right ear. For more, we're joined by Bloomberg News senior writer Stephanie Baker.
He looked like a very vulnerable figure. He looked more vulnerable and emotional than I think we've seen him recently. And I think it remains to be seen how this attempted assassination affects him both politically and personally, and whether or not it changes the way he conducts himself. He's expected to make a speech at the convention that's more focused on unity. Let's wait and see. Donald Trump's vision and understanding of unity may be different than other people's.
Bloomberg's Stephanie Baker. Meanwhile, more questions today as to what led gunman Thomas Crooks to carry out the attempted assassination of former President Trump. The widow of the victim in Bethel Park, Pennsylvania, is talking. Corey Compatore was a husband and father who shielded his family from the gunfire. His funeral is Thursday. His widow told the New York Post President Biden tried to reach her, but she didn't take the call because her husband was a staunch Republican and would not have wanted to, though she mentioned she has no ill will toward the president. About 120 million Americans are under heat alerts with temperatures hitting around 100 degrees. This woman lives in Baltimore.
People need to stay safe because it's a real risk. It's not something we should take lightly because it can be quite dangerous.
Heat alerts are in effect across most of the mid and deep south and along the East Coast from Georgia to Maine. Baseball's all-star game is tonight. Last night, Los Angeles Dodgers' Teoscar Hernandez won the home run derby. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are pushing higher. In fact, we are looking at records. S&P on track for its 38th record of the year. S&P up now by 21 to 56.52. That is a gain of about 0.4%. We've got the Dow Jones Industrial Average up 583, now at 40,800. A gain of 1.5%. NASDAQ, though, in the red. The NASDAQ Composite Index down now by 13 points, lower by about 0.1%. The Russell 2000 up 1.9%. 10-year yield 4.20%. The 2-year 4.45%. Gold up 1.1%. 24.48 the ounce, while West Texas Intermediate crude is down 1.3%. 80.86 a barrel on WTI. Stocks higher after solid retail sales suggested the economy's main driver is still holding up as inflation recedes and the Fed nears a start to cut rates. And with more on this morning's consumer spending data, here's Bloomberg's Vinny Del Giudice.
U.S. retail sales are up if you exclude autos, rising the most in 3 months. Online retailers led June's gain. Auto sales dropped amid a cyber attack on a software system used by auto dealers. Total retail sales, as a result, were flat after being revised up in May. The Commerce Department provides the data. Vinny Del Giudice, Bloomberg Radio.
Among selected retailers, Macy's down again today, falling 0.4%. Walmart, though, up 0.5%. Target shares, they're up by 1.6%, and Amazon up by 0.8%. Recapping, stocks are mixed. S&P higher by 22, up 0.4%. The Dow, though, up 1.4%. NASDAQ now little changed on the day. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. Let's get to one of them right now. Glenn Losseff is a Bloomberg Intelligence senior equity analyst for healthcare services, and he's joining us on United Health. So that stock is up over 5%. The second quarter results surpassed Wall Street expectations, but the question head scratcher that I have is the company's medical loss ratio was higher than analysts expected. This is basically the payment rates not keeping up with patients' care expenses. That is a head scratcher for me. Glenn, I don't get it. Why is the stock up if their loss ratio is down? Is also higher, I should say.
Good morning. Thanks for having me. So the medical loss ratio had sequentially increased, which is true, but it also included the impact from the cyber attack on Change Healthcare, which is one of the processing units for United. And the cyber attack took place in February. So excluding the effect of the cyber attack on medical loss ratio and also the company's sale of its Brazilian operations, the medical loss ratio was actually generally in line with expectations. And furthermore, the company on the calls implied that the core medical loss ratio will remain steady within the guidance the company provided during 2Q and the prior quarter.
So Glenn, it's not every day that we have a big company cite cybersecurity as an issue on the call side. Can you explain kind of what happened and kind of how long-term this may affect their operations?
So the cyber attack took place in February, and United, while operating Change Healthcare, which is basically the business that the company owns that provides services for probably 70% of the healthcare industry, basically processing, think of it as processing reimbursement for, if you go to see a doctor and then your insurance company, let's say not United, the physician charges your insurance company 70% of all the providers using Change Healthcare as a processing agent. So back in February when it happened, it was a big uncertainty. A lot of providers did not get reimbursed on time. But as usual, the market overreacts on the upside and the downside. And it seems that although the uncertainty still remains, it sort of eased as second quarter progressed, and we're entering the second half of 2004. So in 2004, my thinking is that it actually will benefit United Healthcare because of the reserves, United Healthcare and other health insurance because of the reserves they increased after this happened to hedge against the uncertainty of the impact.
Glenn, one of the other reasons that I've seen for why the stock is up so much, and this comes from Mizuho really, is that the optimism around President Trump and the White House is also helping United Health, because basically you'll get more people on Medicare, and the Affordable Care Act will sort of get a little wonkier, or there might be disruptions for that. What do you think about that?
That's what market that's what's driving the upside, I think. But I think it's, as usual, very sort of overestimated. I think the actual impact on health insurance, including healthcare, will not be as big as market wants to think right now.
Glenn, in your space here, healthcare services, where are investors most excited to be in terms of exposure?
Well, sort of my view basically is very out of consensus. So, but
let's get it.
We like it.
But generally, up until recent sort of weakness in the hospital space, everyone was the street was very upbeat on hospitals because basically the recovery from post-COVID sort of muted business has been very strong, and hospitals have done a very good job. Also taking care of patients as patients came back, and also managing their nursing turnover and lowering contract labor mix. So recently, hospitals have been weak, but I still think that that street is pretty a bit on hospital companies. And recently, based on sort of the price target increases within the health insurance industry, I think the street is becoming more bullish on the health insurers as well.
Yeah. What do you think is going to be the next catalyst for these guys?
Well, as I said previously, I'm sort of out of consensus on these names, but for United, its medical loss ratio, weakening would obviously propel health insurance to move higher, and if it's sort of negatively correlated. So if the medical loss ratio sort of starts to weaken, which is positive for health insurers, it's negative for hospitals and healthcare providers, meaning that care utilization is starting to soften. Yeah. So those are the catalysts sort of to look into in the second half, and my view is that that's actually what we're going to see going forward, which is sort of out of consensus, as I mentioned previously.
All right, Glenn, great stuff. Thank you very much. Appreciate it. Glenn Loser, Senior Equity Analyst. He covers the healthcare services for Bloomberg Intelligence, joining us on Zoom. United Healthcare, big company here, had some good results. Stock up about 4 or 5%. Accounted for about 140 points of the Dow's 570 points, so it's having a big impact on Dow Jones in industrials. The S&P is up about 0.4%, and NASDAQ is absolutely flat on the day. Bitcoin also flat, but it's at 63,650. Had a big move over the last several days here keeping an eye on that cryptocurrency. We'll have more coming up with this.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Americans now spend more than 40% of their TV time streaming movies and TV shows. That is the highest percentage ever for online viewing, with Netflix registering the biggest increase in market share. Now, according to researcher Nielsen, streaming viewership increased 6% from May, boosting the share of overall viewing by 1.5 percentage points. Broadcasting lost 1.8 points. Cable fell by 1 percentage point. Right now, we have got Netflix shares a little changed on the day, higher by about 0.1%. Tesla is looking to hire nearly 800 new employees 3 months after CEO Elon Musk hastily ordered the largest round of layoffs in the company's history. And with more, here's Bloomberg's Kimberly Adams.
Charlie, according to a Bloomberg analysis, the roles have steadily popped up on Tesla's career page in recent weeks, with positions spanning artificial intelligence specialists to more run-of-the-mill service jobs. The pickup in postings has coincided with Tesla shares going on a tear, adding more than $223 billion in market capitalization in just the last 14 trading days. While 800 jobs are a far cry from the thousands of positions that Tesla eliminated this year, the new postings provide a glimpse into some of Musk's priorities for the Austin-based company. There were only 3 jobs posted on Tesla's website in May after the company missed vehicle sales expectations by the widest margin ever. Charlie?
And that's Bloomberg's Kimberly Adams reporting Tesla shares right now trading lower by about 0.7%. After earnings, Morgan Stanley up 3.5%, Bank of America up 5.5%, Schwab down 6.8%. Our Nora Melinda's going to have a lot more on earnings coming up in a moment. And those are the companies we follow.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday. This is Bloomberg Intelligence. We cover all the top news in business and finance through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies in 130 industries worldwide. We also keep you up to date on world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, Charlie. The Republican National Convention resumes today with a focus on immigration. Last night, South Dakota Governor Kristi Noem rallied the crowd at the Republican convention in Milwaukee, calling Donald Trump the toughest man she knows, referencing how he cheated death over the weekend, just barely avoiding an assassin's bullet.
But even in the most perilous moment this week, his instinct was to stand and to fight.
Trump named J.D. Vance as his running mate. Too many federal and state court judges chose not to recuse themselves from cases despite at least appearances of conflicts of interest. That's according to the investigative nonprofit ProPublica Group. College students examined more than 1,000 judges and found that some of them had close family or financial ties to groups appearing before them in court and should have considered stepping aside or disclosing possible conflicts, but did not. Gabe Roth with Fix the Court are calling for change.
The current ethics rules don't cut it because I think there's just a lack of transparency regarding the work of a judicial spouse.
Gabe Roth with Fix the Court says it's a real disservice to the transparency and accountability of the judiciary court. Teoscar Hernandez won last night's home run derby in Arlington, Texas, aired on ESPN. But the crowd paid attention to a different kind of pitch last night. And I feel bad, too, because I like her. 4-time Grammy-nominated country music star Ingrid Andress became the latest singer to struggle with the national anthem. USA Today called Andress's
why would you do this to us?
cringeworthy. One fan posted to X, Andress's national anthem broke many, many more hearts than mine. Hashtag Francis Scott off key. The 32-year-old shrugged it off, saying she's an artistic risk taker. It's too bad because I root for her because she's, in my hometown area, in the Detroit area. She was born in Southfield, Michigan.
I mean, I appreciate all of that. That still hurt my ears. All right, Michael Barr. Thank you very much.
You can take it from here, so thanks.
Staying in Detroit-ish, this was a great article that I'm quite interested in. So this comes from CNBC. They had an event on Monday, but in it, Mary Barra, the CEO of General Motors, spoke, and she walked back some expectations for her company's electric vehicle program. This is sort of the latest move by another legacy automaker as momentum slows for plug-in models. She said they won't have production capacity in place to build 1 million EVs at the end of the year. I just find this fascinating because it's like automaker after automaker doing this at a time where we don't really know what the policy on EVs is going to look like. Now, clearly, Musk is involved in politics and donating to super PACs, but still, we don't know if there's a President Trump in the White House, what that actually looks like.
We don't. And, the quote from Mary Barra is interesting. Quote, "We won't get to 1 million just because the market's not developing, but it will get there." So that's really the question I think that Tesla and all the automakers are dealing with. What is really the fundamental underlying demand for EVs? We had that first wave of new adopters, of people who just like the cool things, who want to be, do right for the environment. But when you get down and when you exhaust that demand, where's the core demand for these EVs? And that's really uncertain. That's been the key issue, I think, for a lot of people.
And I have to wonder, too, how much of this is it's just really expensive and hard to get a plant working properly and the supplies are hard to come by in terms of, say, batteries and production problems, and how much of it is the end demand isn't there, so we're going to pull back. And then it's probably, as one would say, a combination of both. And sort of getting that balance, I would think it'd be really, really difficult to sort of manage that.
Hey, look at gold here. Just I mean, up 1.3% today, $30. We're at a record $2,452 for gold. So not bad.
No, definitely not. Apparently on Rate Bet Pivot, we're going to talk about that in the next hour. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to talk retail sales. We had better than expected retail sales this morning. We're going to break them down with Jill Blanchard, President of Enterprise Client Solutions at Advantage Solutions. She'll have the word there. Allison Williams, Bloomberg Intelligence, covers all the big investment banks. We had some earnings today from Bank of America, from Morgan Stanley. Some pretty decent numbers there. We'll break them down with Allison. She's the expert. And Craig Trudell, Bloomberg Global Autos Editor. Why Tesla is on a hiring spree, but didn't they just cut or close to 20% of their workforce?
I mean,
so I don't know what's going on
we need
with
like a
Tesla.
spreadsheet or something.
I just can't keep track of what's going on in that company. But Craig Trudell, he knows what's happening, so we'll check in with him. Right now, let's go to Charlie Pellet for Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. A decidedly mixed market. Let's begin with the Dow. It is surging 578 points right now, trading at a record 40,787 for the Dow. That is a gain right now of 1.4%. We've got the S&P up 18, 56.49. Could see a record at the close today. If we do, it will be the 38th so far this year. Right now, the S&P up by 0.3%. But mid-morning, we had NASDAQ turning lower, now down 32, dropped there of 0.2%. The Russell 2000 cannot ignore small-cap shares today, surging again, up by another 2.1% on the Russell 2000. 10-year, 4.19%. The 2-year, 4.45%. Spot gold up 1.2%, 24.52 the ounce. And West Texas Intermediate crude down 1.1%, 81.03 a barrel on WTI. Stocks rose after solid retail sales suggested the economy's main driver is still holding up. Retail purchases, excluding motor vehicles, not adjusted for inflation, up 0.4%. Greg Dacco is chief economist at Ernst & Young. He says it does point to a healthy consumer.
They are being more judicious with how they spend, how much they spend, and where they spend. And that's still the reality today, despite this fairly favorable report. Let's not forget, you still have a jobs market that's still adding a decent number of jobs, 180,000 on the 3-month moving average, and wage growth is still around 4%. So combine the two, you still have that income support.
Greg Dacco of Ernst & Young. By the way, you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Yes, more on retail coming up in a moment with Jill Blanchard, President of Enterprise Client Solutions. And among some of the retail names today, they are for the most part higher. Macy's, little change, lower now by less than 0.1%. After yesterday's plunge, we've got Walmart up 0.4%, Target up 1.2%, and Amazon up now by 0.8%. So again, recapping mixed market. S&P, though, higher, up 21, on track for another record, up by about 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thanks so much. Alex Steele here alongside Paul Sweeney, Bloomberg Intelligence Radio. We bring you everything that's happening in the market with our great Bloomberg Intelligence arm. We also want to go to Norma Linda, who, if you're just joining us, had an assignment. Her assignment was, who usually uses Tinder? Like, what's the upper end of the age for Tinder users? This all goes into Match, of course. That stock is moving, active investors, yada, yada.
Is 35.
Yes, okay. I need, what's your answer?
I said 35.
You both are saying 35.
Okay. Yeah. No, I'll say 30 then.
I have an answer for you both.
Yeah.
So Actually, the upper end is 34. So you all were very, very close. The bottom end being 25. The average age is 26, but it doesn't seem like it caps too far over 35.
All right. Yeah.
Very good.
You guys are right on the
News
head.
you can use.
I mean, this is, yeah,
News
I'm
you
going
can
to bring
use.
this up. This will be a conversation starter. Another conversation starter is what's happening with Charles Schwab, the worst performing stock in the S&P right now.
It is definitely falling pretty substantially. It's seeing its worst day and lowest intraday level since March, which of course we know was last year's regional banking crisis of March of 2023. Now, the company actually did warn that it's planning to rely more on its off-balance sheet arrangements to house customers' deposits. And it's saying that it may have to shrink itself in order to protect its profits. Now, this comes after it reported total net new assets and new brokerage accounts that fell short in the second quarter of the year.
But you think of Schwab, I think they would be the beneficiaries of all this retail trading, meme stock trading. But maybe that played out during the pandemic.
Or maybe that's a Robinhood thing now more. Or maybe
I mean, I hear a lot of retailers are going toward Robinhood.
Right.
Well, also, they don't have alternative products, right? Am I making that up, Charles Schwab? They
The
have
majority
different...
of their focus is here.
Right. Okay, Bank of America.
Bank of America, we're looking on the flip side here. This is up. It is seeing its best day of the year and highest level in 2 years. Now, this is coming after its investment banking department and its trading department reported results that topped analyst expectations. And it gave a forecast for net interest income, which is the firm's biggest source of revenue that exceeded expectations. So we're seeing shares of Bank of America climbing very substantially, hitting, as I mentioned, their best day of the year.
I worked for Bank of America.
Okay.
For 3 months, summer of 1990. It was actually at Merrill Lynch.
Was this an internship?
Yeah, summer internship between my first and second year of business school. Actually got a deal done. I was one of the few people in my class of like 200 summer interns that actually had revenue next to their name. We did a convertible bond for Kerr-McGee, an energy company.
Cool.
I have no doubt you were a standout.
0 coupon convertible bond.
That's cool. Thanks for sharing that, Paul.
News you can use.
Exactly. Now it's all part of the greater Bank of America.
Amazing.
I love it.
Back to Match Group.
Yes.
Okay, so aside from the fact that now we know the upper age is 34, thank you for doing our homework for us. So it's the third activist investor now?
Yes, this is the third activist investor.
Wow. Do these all work together? Like, what happens
So
here?
it's actually Elliott Investment and then Anson Funds Management. Those are the other two activists that have taken stakes in the company. Starboard is what we're looking at today. That's the third activist investor this year to take stake. And they're all really just hoping for a Tinder revamp. As we know, a lot of these online dating, the dating apps that we're seeing that apparently you guys say, you know, you're not familiar with, that's not your thing, of course. But when we're looking at that range of people from the ages of, 25 to 34, it does seem like they're pulling back a bit, especially as we're thinking about those who actually pay for some of those premium subscription services.
I do it the old-fashioned way.
In person.
Meet them in a bar.
Meet them at a bar.
Yeah.
At the Jersey Shore.
At the Jersey Shore.
I mean, yeah.
Exactly.
It all has to revolve around the Jersey Shore, or else we're lost on that. I don't even know what I would do if I had to date in this day and age, honestly. This is a good conversation. Hey, Nor, thanks a lot. We really appreciate Nor Melinda joining us from Bloomberg News. Okay, so the eco news of the morning was that retail sales number coming in better than estimated. So retail sales, if you back out auto and gas, it was up at 0.8% in June. That retail sales control group was up 0.9%. Sure, they're doing it in areas where prices have come down, so there's still some price sensitivity to it, but it was pretty strong. So we want to get more on that with Jill Blanchard, President of Enterprise Client Solutions of Advantage Solutions. She joins us now from Chicago, Illinois. What did you make of the numbers, Jill?
Yeah, so it's first of all, hi, and thanks for having me back. Boy, I am trying to temper predictions, let's say, because consumer demand is still a really big concern in the back half of this year. A year ago, 18% of CFOs said that they were concerned about the effect of consumer demand on their business. That has now tripled to 54%. Wow. And so prices are up 20 to 40% plus, choose your category. In most cases, the wages haven't kept that same pace. And so there is a big impact on many households across the country. Consumers have been notoriously price sensitive even before the pandemic, and that waned a bit with COVID when they couldn't spend on services and they diverted that to goods. But now they're both back, and they're back at higher prices. And so consumers have to find less expensive alternatives to achieve those same outcomes. They're still traveling, they're still eating out, but the overall transactional value for those is down. And so I'd say I'm trying to temper my predictions for the next 6 months.
What is upflation?
Ooh.
I love that, right? So super, so first of all, I have fallen prey to this, and so I'll give you my confession here. Upflation is this concept of finding new uses for existing products. So think of things like an all-over body deodorant, cereal as an economic option for dinner, frozen vegetables in lieu of fresh vegetables to save on waste. How about this? Ready? Pickle cupcakes. That's a thing, and it's not just the cake; it's the frosting. I've fallen prey to dog wipes. I don't know how they're different than a regular wipe, but I feel better about putting that on her paws. Hair sunscreen, and TikTok
Hair
is certainly
sunscreen?
helping.
Wait, stop.
Hair sunscreen.
What?
It's a thing.
Explain
this is expensive. It's hair sunscreen, so you spray it on your hair so it doesn't so the sun doesn't change it. And TikTok is riding the social wave. Check out the hashtag late night snack. They are virtually creating a fourth meal, and manufacturers are eager to ride that wave. So there's a lot of examples of upflation out there as manufacturers get really creative in trying to get their products into more places.
I don't understand. Like, isn't the point like you want the bleachy sun blonde look? Like, people pay for that. I don't know, whatever. Well, this is going to get off topic, but I'm going to do some homework on this. I'm going to do some research. I'm going to talk about my feelings. Okay, so what about these unusual strategies? Like, are people willing to actually, pay for that? How does a traditional retailer just say, guys, come to my store and buy stuff, like basic stuff?
The word of the month, I think, is creative. And so we just heard about a very creative strategy from manufacturers, and retailers, as well as consumers, are also getting very creative. So retailers are doing the things that we've seen before. They're pricing their promotion strategies. We'll talk today about some of the significant promotion things happening this summer. But let's talk about the unlikely business pairings and collaborations that we're seeing across retailers today to find new business synergies and drive traffic. So, for example, look at Uber joining forces with Instacart and Costco. Kohl's is going to put the Babies R Us stores in some of their stores, much like they did with Sephora. McDonald's has a partnership with Krispy Kreme. And these things have dual benefit. So first, there's the savings on labor and real estate of operating multiple stores as one store. And then there's that unique in-store experience that the younger generations really like. And they're great traffic drivers. I know that when I take an Amazon package back to Kohl's, I have to pass 5 departments each way to take that package back. So really creative solutions by retailers too.
What are consumers doing here? Because we hear about inflation really hitting folks that maybe don't own stocks, don't own bonds, don't own real estate. Yeah. They're the ones that are really being hit by inflation. How does that get reflected in a retail sales number that shows some pretty good strength this month?
Here too, back to my word of the month, creativity or creative. Consumers are also getting creative. We know that they're getting better and better at seeking and finding those deals. Here's an interesting stat. We surveyed over 1,000 shoppers to find that 1/3 of those shoppers are buying their groceries in bulk, and they're sharing with their friends and their neighbors, which is a great way for the lower income household to enjoy the savings that come with larger products that have a better price per count or per ounce. Typically speaking, the lower income households on fixed budgets are forced to buy those smaller products because of that lower price point. So this is a great option for them. And by the way, there could soon be an app for that, because there's an app for that in South Africa today. So it's only a matter of time until it gets here. I have no idea how that would work, but we also never thought that we would share rides with perfect strangers in a car that's driven by a perfect stranger, but we do.
That is really interesting. And that would definitely, especially if you live in an apartment complex, like that could make things quite interesting as well. Just so everyone's clear, I did research sunscreen for your hair. It's really for your scalp, but I still think, like, why not wear a hat? But fair point. This is why it's upflation. And I was just looking at, you can get a 25-pack of mini pickle cupcakes at Baked by Melissa's for $37.
Wow.
That's like a lot of money for little teeny tiny cupcakes. Anyway, this is kind of your point. So Jill, what have we learned though about all the discretionary fun stuff, like services, spas, vacations, getaways, the stuff that was doing really well?
So consumers have pent-up demand for that. They're just finding lower cost ways to achieve those. And so we might be seeing more in value, but I'll go back to the in volume, but I'll go back to the transactional value. Typically speaking, that's down. So they're doing more of that than we've done before, but they're doing it at a lower rate.
So,
I see.
Yeah, Joe, how about the back to school? That's probably the next shopping season for you, that you get a sense of how retailers are doing, how consumers are doing. What's the expectation for back to school this year?
So, kudos to the three big retailers who really created a summer of savings and really jumped into trying to create a season in what is otherwise a lower season right now. So we just got done with the Walmart Deal Days, Target Circle Week. Today's the kickoff of Amazon's Summertime Prime Days. All of those have discounts on thousands of items with a focus on back to school. Plus Amazon is doing things like dropping a new deal every 5 minutes. And so they're really swinging for the fences in terms of capturing trips, creating sales, and trying to meet the consumer with economic value.
What do you think will happen if the Fed cuts rates? And I say that because if all of a sudden we get relief and there's 50 basis points of cuts in the next 4 months, do people have a lot more money to spend? Does it actually then increase spending?
Oh, we talk a lot about this. I mean, typically speaking, lower interest rates fuel the purchases of large things like cars and homes. And so when they're making those purchases, that might actually trickle down to smaller spends within the household. But typically speaking, initially, they don't have a near-in effect on those smaller spends. That said, consumers are very attracted to enticing loan options. So let's talk about the buy now, pay later market. That's up 12% on a year-over-year basis. It accounts for $87 billion in debt. There's lots of different figures out there. It's expected to grow at a 25% CAGR over the next 7 years. So let's hope that consumers can pay those back because they come with very steep late fees as well as credit risk. But it's indicative of the fact that consumers are enticed by attractive loan options.
Talk to us about like trading down. Are people trading down from Walmart and a Target to maybe the dollar stores? Do we see that activity, or do they just try to be more frugal within the Targets and the Walmarts of the world?
Oh boy, I'm not fond when somebody gives the answer mixed, but I'm going to give you the answer mixed. A lot of households actually are trading down. The reason that I say mixed, though, is that we see some of those mainstream retailers trying to be a dollar store. So they're rolling out more and more smaller packages at lower price point to be able to capture that dollar trip. So it's really both. But overall, though, a trade down, it just varies whether we're talking about trading down in categories like a steak to a pasta, trading down in channels from mainstream grocery to dollar, or trading down in brands from premium brand to a value or even private label.
So great, Jill. We really appreciate you. That was just so interesting. I'm like now deep in the hole of all this weird stuff of inflation, so that's going to stay with me for a while. Jill Blanchard, President of Enterprise Client Solutions of Advantage Solutions, joining us from Chicago, Illinois. I'm looking. I totally forgot it was Prime Day. But here's the thing, like. Is Prime Day a thing, or is it just like an ad for Amazon? Like, how many, Echo Dots do you need?
I don't know. Having not participated in this, I don't know, but it certainly drives sales.
That's crazy.
That's what they're looking to do. And you get the same thing from Alibaba. They have their Singles Day. Mm-hmm. So I think that's maybe who started. I'm not sure. But those days that they work for the retailers, they drive traffic. That's what it's all about, right?
Yeah, I mean, maybe I do need like an automatic cat litter pan cleaner thing for $300.
Sure, why not?
Maybe, I don't know. All right, coming up, we're going to get more in the market here with Allison Williams, Bloomberg Intelligence Senior Analyst for Global Banks and Asset Managers. We're going to break down Morgan Stanley and Bank of America. Where is the trough in net interest income? That truly is the question. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a major move to the upside for the Dow Jones Industrial Average, right to the numbers. Fast-moving markets on this Tuesday, with the Dow now higher by 612 points, up 1.5%. We've got the S&P up 24, higher by 0.4%, looking at a record on the S&P. If we do get a record close today, it will be the 38th of the year on the S&P. NASDAQ swinging between gains and losses, as of now higher, barely up by 2 points. Russell 2000, major story there. Small caps very much in vogue again today. Russell 2000 up by 2.3%. Stocks hitting records after solid retail sales suggests the economy's main driver is still holding up. 10-year 4.19%, the 2-year 4.45%. Gold up 1.6%. West Texas Intermediate crude down 0.9%. Again, retail sales, excluding autos, are up, but can the trend continue? Jill Blanchard is president of Enterprise Client Solutions. She was a guest moments ago right here on Bloomberg Intelligence.
Consumers have been notoriously price sensitive even before the pandemic, and that waned a bit with COVID when they couldn't spend on services and they diverted that to goods. But now they're both back, and they're back at higher prices. And so consumers have to find less expensive alternatives to achieve those same outcomes.
Jill Blanchard of Enterprise Client Solutions speaking with us on Bloomberg Intelligence. By the way, you can hear more of the conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Among some of the other economic data points out today, home builder confidence fell for a third month in July as mortgage rates deterred buyers. Business inventories piled up in May, another sign the economy is moderating with interest rates running at 2-decade highs. Briefly, after earnings, Morgan Stanley up 2.3%, Bank of America up 4.8%. Hard hit after earnings, Charles Schwab down now by 8.1%. Whole lot more on those bank stocks coming up in just a moment with our Allison Williams. Again, recapping here, major move for the Dow, up 603 right now, up 1.5%. S&P up by 0.4%. The Russell 2000 ripping higher by 2.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in sweltering New York City. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast. A lot of stuff coming out, a lot of earnings coming out. We had eco data today, retail sales solid. And on the earnings front, we had some of the big investment banks report here. Morgan Stanley and Bank of America's Charlie was just reporting. Stocks at 52-week highs, both of them here today. So Allison Williams is going to break it down for us. She's a senior analyst. She covers all these big banks for Bloomberg Intelligence. She joins us here in our studio. Allison, let's start with your former firm, Morgan Stanley. The stock's up 2.5% today, 52-week high. What did the street like here?
I mean, really strong institutional numbers. I mean, it was a great quarter for trading and investment banking. So equities trading really, I think, a source of strength. Morgan Stanley doing better than expected across the board and just really well. So equities trading, I think, was the standout. Fixed income, was sort of mixed, but really compared to a year ago, I think that's strong, that those revenues are turning out to be resilient. And on the investment banking side, investors are excited that there could be momentum coming into the next quarter. M&A still just historically low, so improving from a low base. Same thing with equities, but I think reasons for optimism, especially with the stocks in general doing so well.
Now, for Bank of America, when I think of Bank of America, I think of their corporate bank, making big loans to big corporate customers around the world. What did you see there?
So, I think the demand for loans is still something that we're looking more for the second half. If we do get the Fed rate cuts, that is definitely going to be a help. And I think for Bank of America, what people are excited about is that it could be the trough. So Bank of America saying that it's going to be the trough. This will be the weakest quarter, but keep in mind that they are baking in the Fed rate cut expectations and some loan growth in the second half. So we'll see if they can deliver that. But definitely telling investors what they want to hear today in terms of the fourth quarter, a little bit higher entry rate, firming that up, and again that the most of the weakness could be behind us.
So does that mean that if we don't get Fed cuts, that that Bank of America is going to have some problems here?
I think where the disappointment will come will be loan growth, spurred by Fed cuts, right? So I think that some of the loan growth that they're factoring in is based on that. We heard from Wells Fargo where they're, still a lot more cautious on the loan growth side, and commercial and industrial has been a weak spot. Credit card has been the strong spot.
When I was in banking, one of our most lucrative businesses at the Chase Manhattan Bank was just leverage lending. Lending to companies that don't have assets or inventory or any of that kind. We just lend against cash flow. It's a little bit more risky. It's tough to show your credit officer where the collateral is for this loan. But we made a lot of money doing it. Talk to us private credit market. How's the private credit market been poaching on that business?
So actually, you would have been this would have been a good quarter for you.
I know.
You'd be happy. The first quarter was good. Second quarter was good. And I think that if you look at some of the most recent statistics that we've seen is that banks are still doing a lot of that refinancing, right? So a lot of the business that's been happening in the debt markets, debt fees, a source of strength across the banks this quarter, has been refinancing, and that leveraged lending business has been doing well at the bank. So even though private credit is certainly raising a lot of funds and a product in demand, banks are still getting their share of refinancing in the leverage loan volumes. And that's, you saw like the huge growth at Citigroup and the numbers at Goldman Sachs where they have relative strength in those businesses. High yield's another area that's doing really well.
Back to the consumer. So we'll have Paul do the investment banking stuff. I'll do the consumer stuff. What about charge-offs on their credit card losses for Bank of America? Was that higher, lower? Where did that come in line?
In general, I would say their provisions overall came in line.
Okay.
We did see charge-offs in the card business, charge-offs in commercial real estate. So those are areas that we're watching, but controlled and in line with expectations. I think the area of weakness that we saw in card this quarter was at Citigroup. They have a private label business that's tends to skew on the lower income side of things. You're seeing losses come in above their targeted range. There is a seasonal pattern to that, and so there are expectations that could come in. But I would say the second quarter did not give us confidence in those expectations. So I think that continues to be an area for watching. It's not necessarily a big area for the big banks that we're talking about today and the ones that I cover. But I think it's important to watch, for the overall economy and to some of the other card names such as Synchrony.
CEO at Morgan Stanley. We have a new CEO, Ted Pick. I guess with a little bit of hindsight here, does it seem like it's kind of working and everybody's kind of found their place?
So it seems like, he's talking with conviction. I think the boldest statement he made today was with regard to the margins in the wealth business. So the wealth business, as you know, under the former CEO and a lot of acquisitions, wealth and asset management is the predominant revenue and profit engine. It's what investors are watching. The wealth margin was something where Pick early in the year took off some of the upside under the prior targets. And that 30% wealth target, I think, is a question among investors if they can get there, and Ted really trying to instill confidence that he is a believer. The wealth flows at Morgan Stanley, I would say, that is probably the number one thing I think that we watch for them, and that did come in weak this quarter. The fee-based part of those flows were relatively resilient, so some puts and takes there. But I think the wealth flows do bear watching, and that really has been the engine of optimism. Investors like, the tilt towards the recurring fee-based business. And so I think that they'll have to continue to deliver on that 30% margin that Pick is confident in.
And then I'll go to sort of what the macro read is from Morgan Stanley, because also on the call, Ted Pick said that you're going to see normal M&A return unless there's a full-blown recession, and he thinks we're in the early stages of multi-year investment banking-led cycle. Oh, yeah?
Oh, yeah, but we've been hearing that for so many quarters now, and you're starting to definitely, feel more of the doubt coming from analysts, right?
Okay.
So the 2021, amazing. 2022, disaster. The lift that we got last year did not materialize. I would say that so far this year, M&A has been disappointing again. And, you can see in terms of the reported fees and the announcements, right? So both of those have been disappointing. It does tend to pick up late in the year. It does tend to pick up after elections. So I think it'll be hard to get, for that particular business line, sort of the momentum people are looking for, perhaps until after the election. But on the underwriting side, I think is where you're seeing, perhaps more of the momentum and strength. Goldman Sachs, though, who tends to be the biggest in reported revenue, did say significant uptick in their pipeline. Debt underwriting and advisory were the areas of strength.
All right, very good. Allison Williams, thank you so much. We appreciate that. Allison Williams covers all the big banks for Bloomberg Intelligence, joining us here in our New York studio. Story going out on the Bloomberg terminal, Alex, car repossessions surging 23% as Americans fall behind on payments. High interest rates and tight budgets are making monthly bills unaffordable for a growing share of automobile makers.
That's really quite interesting.
Yeah,
I wonder how that goes into the used car market.
I think it just shows, I'm sure, kind of flows all the way through, but you think about some of the average price tags of these vehicles, because people are getting the big trucks and all this, the SUVs and all that kind of stuff. That's maybe doable at lower interest rates, but as the rates go up, the payments become really tough. So have to keep an eye on that. We'll see more reporting on that on Bloomberg. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, Charlie. It's day 2 of the Republican National Convention in Milwaukee. Former presidential candidate Nikki Haley is slated to speak at the RNC today. Presidential historian Andy Rudalevich, professor of government at Bowdoin College.
It'll be interesting to see if she continues to, if she rather chooses to hew to the sort of more isolationist line with regards, for example, to NATO or Ukraine, that the top of the ticket and now number 2 on the ticket have been pretty vocal about. She was sort of more in the sort of traditional, foreign policy conservative lane during the primary season, and of course was pretty critical of President Trump as, also being old and perhaps past his time in office.
Presidential historian Andy Rudalevich. The investigation into the attempted assassination of former President Trump is focused on finding the deceased shooter's motive and why security went so horribly wrong. The director of the Secret Service, Kimberly Cheadle, telling ABC she takes responsibility for the breakdown in security.
This is an event that should have never happened.
Who is most responsible for this happening?
What I would say is that the Secret Service is responsible for the protection of the former president.
So the buck stops with you?
The buck stops with me.
Meanwhile, President Joe Biden is calling on Congress to pass a form of national rent control for about 20 million apartment units nationwide. The proposal would give large landlords a choice. Either they agree to cap rent hikes at no more than 5% per year, or they forfeit federal tax breaks coveted by rental property owners. President Biden will campaign in Las Vegas today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Very split markets. Smaller firms rallying. Russell 2000 on track for its biggest 5-day run since May of 2020. That index up now by 2.4%. Conversely, the mega cap space that has powered the bull market under pressure. NVIDIA driving losses today. We got NVIDIA down 1.5%, all part of a broad sell-off for the NASDAQ 100 index, NASDAQ Composite Index. NASDAQ Composite down now by 7 points, down less than 1/10%, but in the red. To put it in context, S&P at 5650 on track for a record close, up 19, up by about 0.4%. The Dow up 536, up by 1.3%. 10-year yield 4.18%, the 2-year 4.45%. Gold up 1.7%, 24.63 the ounce, and West Texas Intermediate crude down 1.3%, 80.85 for a barrel of WTI. Business inventory is piled up in May, and with that story, here's Bloomberg's Vinny Del Giudice.
It's another sign the U.S. economy is moderating under the weight of high interest rates. Business inventories rose 0.5% in May, the largest increase in almost 2 years as sales stalled at American manufacturers. Auto inventories led the increase. Auto sales are especially sensitive to interest rates. The inventory-to-sales ratio was flat for the 4th month in a row. Vinny Del Giudice, Bloomberg Radio.
Briefly, Americans spent more than 40% of their TV time streaming movies and TV shows, highest percentage ever for online viewing. Netflix registering the biggest increase in market share. Also, sources tell Bloomberg Verizon Communications is exploring selling thousands of mobile phone towers across the country. Again, recapping stocks mixed. S&P up 17, gain there of 0.3%. Small cap surging. Russell 2000 up again today, up another 2.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so very much. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news and analysis with our great Bloomberg Intelligence analyst team. They cover 2,000 companies in 130 industries worldwide. And occasionally we go across the pond and check in with Craig Trudell. He's Bloomberg Global Autos editor, and he joins us now. So many fun things to talk about. But let's just start with Tesla for a second, because the news was quite staggering. They're going to hire nearly 800 new employees, but didn't also they just fire a lot of employees?
Yeah, this is very Elon Muskian of Tesla in that it's sort of, it depends on the day what's going on at this company. So, yes, a few months back, on the heels of Tesla selling about 20% fewer cars than it did in the fourth quarter, Elon Musk wasn't particularly happy with that quarterly showing. He wanted the company to cut headcount by a commensurate amount, so roughly 20%. So, for context, this is a company that, had quite a few employees at that time. They started the year with around 140,000, so that would mean 28,000 people being let go. It's unclear whether they got to that, but it is absolutely clear that, certain parts of the company were decimated. I think most notably the supercharging team. That really turned a lot of heads because it was a, aspect of this company that has been looked at as, such a sort of feather in their cap that they really, invested where others didn't and built a charging network that worked, whereas others have not worked very well, particularly in the U.S. And so it is kind of shocking to see, such a significant, culling of people followed by a hiring spree of sorts.
So do we know kind of what type of roles they're hiring for? Are they hiring people to bend metal, or are they looking to like some software guys for AI and all that, the robotaxi?
Or the superpower people,
yes.
The superheroes.
Yeah, I think, we did report even weeks back that some of the supercharger people who were, a part of the team that was really, cut to a very significant degree were brought back relatively quickly. Notably, the woman who was running that group, has not been brought back. And there were some reports that maybe she, kind of tried to protect her team and was, dismissed as a result of that. So, in terms of what parts of the company are hiring, it's pretty broad, but I would say, the data that our very own Kara Carlson has crunched, service is a big aspect, which is maybe no surprise in that, the summer season is a busy one for Tesla. People are out, driving for vacations. It's warm out, so they're running their air conditioners. To the extent that you do need to service an electric vehicle, that's one of the things that is common. So, one of the interesting aspects of this story is that, we did speak with people who were a part of this job cutting, who, said that they were surprised that some of the service and salespeople, that the company, clearly needs at a time of, busy service work, and a company that's struggling to sell more cars. We're seeing some people being brought back there, but it is very widespread. I think notably as well, AI and robotics is definitely an area where everybody's looking at very closely because of what this sort of new priority is or emphasis is on the part of Musk.
Craig, Bloomberg's also out with a story, David Welch, that GM's Mary Barra says the automaker won't sell 1 million EVs next year. So just another story, another data point about kind of maybe where the ultimate demand or lack of demand may be for EVs. What's the latest feeling within the industry about how this thing's going to evolve and what pace?
Yeah, we've seen a really dramatic pullback on the part of GM and Ford in particular. I feel like, Stellantis, formerly Fiat Chrysler, they were sort of slow in the first place, making this transition, and have, not necessarily had much to pull back from. But I would not be surprised if they sort of, joined the quote unquote party in terms of, maybe dialing back sort of the ramp at which they, try to produce more electric vehicles and sell them. But it is very interesting to see, GM and Ford, really be sort of welcomed with open arms by the White House. Mary Barra being lauded by Biden as leading the EV transition. That really, ticked off Elon Musk and helps explain why, in the last few days we've learned that he's been planning to spend quite a bit of money on, contributing to PACs to get Donald Trump reelected.
Well, that was my thing, is that the Musk-Trump love affair I find to be quite interesting, because if we can just game out that the love affair is also so President Trump would be more nice to EVs, is the huge change that we're expecting with alternative energy and the IRA and a Trump administration maybe not going to happen. I mean, just look at solar stocks yesterday. They got smoked because of it, but Tesla didn't.
Yeah, it is surprising. I mean, maybe if you're trading Tesla, you sort of reckon that, the CEO very, very publicly endearing himself to the candidate will sort of, come back to benefit him down the line. And maybe some of these threats to do away with electric vehicle tax credits and so forth will fall by the wayside. Elon even went so far, in the last day or so to sort of claim that doing away with subsidies would only help Tesla. I don't know how exactly he squares that circle, but perhaps it's a matter of Tesla is the strongest of the companies that's trying to make this work, and is furthest along, and so taking subsidies away would hurt competitors even more so than it would Tesla. But it certainly wouldn't be good for Tesla to lose access to $7,500 for a lot of its customers in the U.S. or would-be customers, and right. So. I do think it's very interesting, and we've heard very similar sort of anti-EV rhetoric on the part of J.D. Vance, his running mate, and so I think it's not only Trump who's sort of campaigned against EVs, but his running mate as of yesterday.
Right. Hey, Craig, thanks so much for joining us. Always appreciate talking to you. Craig Trudell, he's Global Autos Editor for Bloomberg News, joining us via Zoom from our London Queen Victoria Street headquarters. How about this? Since April 22nd, Tesla stock is up 78%. Such a move. There's such negative sentiment there for 4 or 5 quarters here. Again, as the market's trying to discount what is the demand really like for EVs going forward, and I think definitely a turnaround here. So take note of that. Now, a big market cap stock as well. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft's investment into Inflection AI will be getting a full-blown UK antitrust probe after the watchdog said it needed to take a closer look at the hiring of former employees from the artificial intelligence startup. Right now, we got Microsoft down 1.1%. BlackRock optimistic about the growth of actively managed ETFs after investors across the globe poured more than $160 billion into such strategies this year. In a new report, it's projecting that global assets in active ETFs could reach $4 trillion by 2030 from the current $920 billion. It says regulatory changes in the U.S., the growth of ready-made portfolios for advisors, and the rise of self-directed investors could all contribute to the trend. BlackRock up by 0.8%. Tough day for Charles Schwab. Stock now down by 8.9% after reporting that fewer clients opened new brokerage accounts with the investing giant than analysts expected. Stephen Biggar is Director of Financial Institutions at Argus Research.
But, still a terrific franchise in terms of their margins. The deposits have stabilized from a year or so ago. Still a bit more expensive, but the outflows that we had been seeing last March have certainly subsided. So, we'll take a look at the more of the commentary that they have at this point, but I do think the future is still bright for Schwab.
Again, Schwab shares down now by 8.9%. Also reporting earnings this morning, we heard from Morgan Stanley. Morgan Stanley up right now by 1.8%. Bank of America rallying 4.6%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from the Interactive Broker Studio right here in the very, very steamy Midtown Manhattan. We want to keep you updated with world and national news, and for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, Charlie. It is day 2 of the Republican National Convention in Milwaukee. Yesterday, after the RNC officially nominated Donald Trump and his running mate, J.D. Vance, delegates then heard from a flurry of speakers. Congressman Byron Donalds pushed the new theme of the party.
And if there was ever a time in our nation to come together, that time is now.
Congressman Donalds of Florida. Today, the theme of the RNC will be immigration. As for President Biden, he's now saying it was a mistake to say he wanted to put a bullseye on Donald Trump. But in an NBC News interview with Lester Holt, the president says his opponent's rhetoric has been more incendiary.
It was a mistake to use the word. I didn't say crosshairs. I meant bullseye. I meant focus on him. Focus on what he's doing. Focus on his policies. Focus on the number of lies he told in the debate. Focus. I mean, there's a whole range of things that, look, I'm not the guy that said I want to be a dictator on day one.
President Biden also tells NBC's Lester Holt he plans to debate former President Trump again in September. The Olympic flame has officially arrived in Paris. Paris 2024 Committee President Tony Estanguet says that it is fantastic to see everything come together after years of planning.
It's fantastic to see the Olympic flame in Paris, to celebrate the athletes, to celebrate the games and the Olympic spirit. It's just unique. 10 years that we are working on this project, and now it's becoming real.
By the way, the flame was being carried by BTS star Jin, who recently wrapped up his mandatory military service in South Korea. Finally, this stinks. Tomorrow's the last day people in Las Vegas can gamble at the Mirage. After opening in 1989, the Steve Wynn icon on the Strip is closing its doors for good. It will be missed. The ceremony will be held at 9 a.m. Vegas time. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, and Charlie.
Who's awake at 9 a.m. Vegas time?
That's the Mirage, right?
Yeah.
That's where I learned to play craps.
Yeah, but not at 9 a.m. Like, who's there for 9 a.m.?
People that were there from the night before.
Oh,
That's
I
how
see.
you roll,
Yeah, I see. You just haven't slept yet. So I have Paul's vacation for next year. Are you ready for this? Okay, thank you, New York Post. So Pan Am, remember Pan Am, has announced a special 12-day comeback journey next summer. It costs a whopping $65,500 for a solo ticket. Slight discount, though, for two, so you're in luck. It goes from where it go from? New York to Bermuda, Lisbon, Portugal, Marseille, London, and Ireland, and then back to New York.
Nice.
Travelers were aboard a privately chartered all-business class Boeing 757-200. It will feature upscale catering featuring continental cuisine and an open bar on all flight legs, plus special seats fitted for gathering and socializing.
Wow, that's a pretty cool deal.
You're going to sleep in some of the top hotels that each stop has to offer, from the Four Seasons, Lisbon, to New York City's Waldorf Astoria, and which will be hosting gala evenings before and after the trip.
And a posh dinner at Ireland's Flying Boat and Maritime Museum. I didn't know there was one. I'm going to Ireland this fall. Maybe I'll try to find that museum. It's home, this museum, to the only replica of Pan Am's 1930s Boeing 314 Clipper. So they're relaunching the brand, they're relaunching the airline, and maybe do some stuff, I think starting the 2025 flight also appears to serve as a test run for Pan Am's plan to offer more lavish journeys in 2027 in celebration of the airline's centennial.
That's a head scratcher for me.
Pan Am, TWA, some names from the past.
Yeah. I mean, but do they have like the seats, like they're basically bunk beds that you used to have on old trains that you sleep on?
But still, the lie flat beds they have on planes today are awesome.
Awesome.
I can sleep like a baby on this.
Yeah. Anyway, there you go. So Paul's booked for next summer, just in case you all are wondering. All right, that wraps it up for Bloomberg Intelligence. Coming up, Balance of Power with Joe Matthew and Kaylee Lyons from the RNC in Milwaukee. This is Bloomberg.
From the Republican National Convention in Milwaukee to our TV and radio audiences worldwide, welcome to Balance of Power alongside Kaylee Lyons. I'm Joe Matthew. Welcome to day 2 of the Republican National Convention. Kaylee, J.D. Vance looming large in the hall last night, and we've got some interesting speakers, including Donald Trump's former opponent, Nikki Haley, we'll be hearing from later today.
Yeah, of course, a late addition to the convention schedule. Trump extending the invitation over this past weekend in the aftermath of the attempted assassination on him in Pennsylvania on Saturday. And this, of course, comes as we're all bracing for all of the speakers, frankly, to be speaking differently than they may have before that event occurred, which is a message of unity and perhaps bringing in Nikki Haley, and I'm sure the aim is to bring in the primary voters who chose her over Donald Trump during the course of the primary campaign into the fold.
Reports as well, Ron DeSantis could be speaking. This is an interesting thing to watch evolve here as the Republican Party and this RNC try to harness unity following this assassination attempt on Saturday, Kaylee.
Yeah, and of course, the conversation we were all having yesterday prior to the selection of J.D. Vance as the vice presidential nominee was whether or not, in the spirit of unity, Trump might go for someone a little less intense with the rhetoric, shall we say, less of a bulldog. And instead, perhaps the decision was you get the bulldog to fight for you so that you yourself can speak unity.
Interesting. We're going to watch this unfold in real time together with Bloomberg's best, Laura Davison and Gregory Cordy joining us here at the table. Welcome to day 2. It's great to have you both here. Laura, what are we in for in today's session?
So tonight is the second night. The theme is all about Make America Safe Again. So last night was all about the economy. Tonight is going to be about crime, border, immigration. A lineup of speakers. Most interesting, perhaps, is Nikki Haley, this late add to the schedule. What I'm really watching for is what is the reaction in the room? When Mitch McConnell came onto the floor yesterday, he was booed. Wow. It is possible that Nikki Haley also has a chilly reception. The Republicans that are here are not necessarily her wing of the party. This is very much a Trump crowd, and so that could create, put a little cast of shadow over the party unity message that they're at least trying to project forward.
Well, Nikki Haley, of course, prior to the convention, released the delegates that she did win during the primary process and encouraged them to vote for Donald Trump. When she dropped out of the campaign, though, all the way back in March, she did not encourage those who voted for her to do the same. She said Donald Trump needed to earn those votes. Do you expect, Gregory, we might hear differently from her tonight, a suggestion perhaps that those votes have been earned?
You know, it's remarkable to think about how we've gotten to this point where a year ago we were talking about a dozen different candidates in the Republican Party all challenging Donald Trump for the nomination. Some making the point a little more strongly than others that Trump was disqualified from the presidency. I remember Asa Hutchinson, Chris Christie, Nikki Haley became more aggressive on that line of attack as things went on. But most of the field was basically auditioning for what we have seen now, the Veep stakes and cabinet posts. But it is remarkable how much this party has unified around Trump. And of course, the events of last weekend, I think, have only contributed to that momentum, that this is a party, you feel it on the floor of this convention. This is a party that's very much united around Trump. Not that they weren't before, but there's a real feeling, not just of unity, but of solidarity. And it's not an angry convention like maybe the 2016 convention was. It's unified in a more optimistic way. It's just the sense I'm getting from this convention.
Well, that's something. I'd love to hear from both of you about the issues where these two overlap, and in some cases not. But when it comes to foreign policy, J.D. Vance talked last night on Fox News about his views. Here he is.
I think what President Trump has promised to do is go in there, negotiate with the Russians and Ukrainians, bring this thing to a rapid close so that America can focus on the real issue, which is China. That's the biggest threat for our country, and we're completely distracted from it.
To key off of this, Laura, what happens to the war in Ukraine if Trump, Vance win?
So the thing that's important to remember is that, especially as vice president, he has less say over some of things like funding the war in Ukraine than he did as a senator. He's able to hold up those bills directly. But if Trump wins the presidency, Ukraine, hope for additional funding, all but disappears. Especially if Republicans take both chambers, you can pretty much take that off the table as an issue in Washington. Vance is very much cut from the same cloth as Trump, saying, look, I don't want to be involved in these wars. I don't want to focus on the Russia-Ukraine border. I want to focus on the U.S.-Mexico border.
He's a veteran speaking.
He is, which is a real, this is really out of step where his colleagues in the Senate are on this issue. Yeah. He's really an outlier there.
Okay, so Trump and Vance obviously are aligned in their isolationist bent, if you will, the populist bent. And Vance is literally half the age of Donald Trump at this point. Trump is 78, Vance is 39. So the question we also have is not just the implications for, say, 2025 through 2029, assuming that this ticket wins, but beyond that, if Vance then is a contender in 2028, if he is indeed vice president, might make him the most likely to win the Republican nomination. Obviously, none of us know what happened, but is this essentially the solidifying of a MAGA Republican Party that is going to live well beyond Donald Trump?
Yeah, the two most disappointed people in Milwaukee yesterday were probably Doug Burgum and Marco Rubio, who were also sort of at the top of the short list for VP. The third most disappointed person has to be Ron DeSantis, because Vance has now been tapped as the de facto heir apparent. Now, Trump hasn't said anything about that. Obviously, we're a long way from 2028. But in the natural course of things, you would have to think that this would give Vance a considerable leg up to be the future of the party if he wants to be that, and of course every politician does. That every congressman wants to be a senator, and every senator wants to be president. So absolutely, I in terms of the ideological daylight between them, I don't think there's much. But even if there is, vice presidents tend to subsume the policies of their president. In the long term, I think Vance, very crypto-friendly, obviously, very tech-friendly. These are policy areas where Trump hasn't been particularly attuned to in the past, and this rounds out the ticket a little bit in some policy areas that Vance has the expertise on.
Well, I wonder if they bump into each other on some issues as well, like raising the minimum wage or antitrust. For what it's worth, we're probably making too big of a deal out of a running mate selection here. The long-term implications are important, Gregory, but to the extent that it's going to impact Donald Trump's view on these issues, should we be paying attention?
I think the biggest interesting thing to watch is the divide between big tech, which Vance has said he wants to break up, the Amazons, the Googles, all of these. He's teamed up with Elizabeth Warren on that. Little tech. Little tech is the world that Vance comes from, startups, these earlier stage companies
so
where he wants to cut
in the middle here?
It's very possible. Or you could see sort of a dividing line there of, cutting regulations for small companies while, on the other hand, going after some of these bigger, more established tech companies.
All right, Laura Davison and Gregory Cordy here with us in Milwaukee. Thank you so much as we assess what the selection of vice presidential nominee and Senator J.D. Vance ultimately means. And this is something we spoke about yesterday with Governor Brian Kemp of Georgia. We asked for his reaction to Donald Trump's choice of Vance here and what ultimately it means for swing states especially. And this is what he said.
Look, I think it's a good pick for President Trump. I mean, Senator Vance brings an element of youth to this race that we haven't seen, that's for sure. The guy's a United States Senator, obviously qualified to serve. Great messenger, which is, I think, very important when you think about what's going to be going on the next 4 or 5 months in this campaign.
Well, as we consider this selection, though, knowing that you represent one of the key swing states we are watching in this cycle, knowing Georgia is not bright red or bright blue, what does J.D. Vance bring to undecided voters in Georgia? How is he likely to influence that opinion when he, as we've talked about, may just be seen as a younger version of Donald Trump himself?
Well, I think it's not just what J.D. Vance brings to the race, but also what President Trump and other Republicans can do between now and November to make sure that, you're getting those persuadable voters. For me, and what I'm hearing every day is that, Americans and Georgians can't afford another 4 years of Joe Biden. I think that is a message that J.D. Vance can deliver. It's certainly a message that President Trump and a lot of other Republicans, whether it be, people that we're trying to help win at the state House and state Senate level to hold our majorities in the General Assembly in Georgia, are going to be talking about people.
That was part of our interview with Georgia Governor Brian Kemp yesterday, and we continue to push forward on this day 2 of the Republican convention now that J.D. Vance is Donald Trump's running mate, and especially traders are watching to see what this ticket actually means for the U.S. economy and policy that will affect financial markets going forward. Lonnie Chen is with us now here in Milwaukee. He is a Hoover Institution fellow, also former policy director for the Romney-Ryan campaign back in 2012. I'd like to begin, Lonnie, by asking you something I was just talking about with our colleague Gregory Cordy, this idea that the Romney Republican Party, the Romney-Ryan ticket of 2012 is very much not a Trump-Vance ticket of 2024. And now that we have a selection of a 39-year-old vice presidential nominee who could lead the party forward in this direction for many years to come, is this the end of that Romney Republican Party?
Look, clearly contrast in style as well as substance. I would hesitate to say it's the end because you still have some members of Congress, I think, who reflect a different point of view. I think we're in a transitional period. And the Republican Party has changed from being a party, country club Republicans, corporate Republicans, whatever you want to call them, to a party that's more working class and more populist, both in terms of definitionally how it transcends, how it transacts as politics, but also policy. And you're seeing the populist edges of that in this Trump-Vance ticket. So I don't necessarily think that the party of old is dead. I do think that it is a different party and it continues to become a different party. There may be a point at which that's true, but for now at least, I think there is still some influence of these more traditional points of view on the party.
Well, do you worry that this economic populism, some call isolationism, is dangerous for the party, for the country?
Well, I think there's some areas in which that the policy prescriptions are not quite what I would advocate for. So we're going to have a big discussion over tax reform next year with the expiration of provisions in the Tax Cuts and Jobs Act. And I think there will be a very real discussion, for example, around the corporate tax rate. This is one area where I think where I think the sort of Trump-Vance view of the world, maybe more the Vance view of the world, differs from what we might expect traditional Republicans to argue for. In a large tax reform package, it would not surprise me to see the corporate tax rate move in a direction opposite than what we saw in the 2017 round of reform, just because the premium is going to be placed on individual tax reform. And given the deficit and debt posture we have, I have a really difficult time seeing that tax cut being completely unpaid for. So I do think that there are ways in which we are going to see some differences beginning to develop.
Well, to the point our colleague Laura was making, when it comes to, say, the tax conversation, that ultimately is one that has to originate in Congress just to be signed by President whomever. Does J.D. Vance have less power to influence that as vice president than he would as a United States senator?
Oh, I don't think so at all. Even though the conversation on tax in particular will start in the House, the vice president, particularly if, let's say, a future President Trump empowers his vice president to be on point on these things, he will have a tremendous amount of influence over where this conversation goes. And given how divided and fractured the Congress is, how much we're seeing expertise leaving the Congress with long-term members of Congress who have experience in tax and economic policy leaving, it does place a premium on leadership from the executive branch, in my view. So I actually think that J.D. Vance is in a terrific position to influence policy, whether it's economic policy or any of the other areas he's interested in.
Deficits ballooned under the Trump administration, and you'll then tell me that they ballooned more under the Biden administration. But are we going to do it all over again under Trump 2.0?
It doesn't seem like a lot of the constraints are there anymore. The political constraints have departed, right? I mean, there used to be some in our politics who were arguing in favor of fiscal discipline and talking about the value of entitlement reform. That conversation seems to be off the table. So I do fear that in the short to intermediate run, we are looking at a situation where fiscal constraints have been lifted, and there is very little to constrain spending, whether of the tax expenditure variety or direct spending, or even bolstering of entitlement programs. So we're in a very different world now than we were in 2012 when I was helping the Romney-Ryan ticket.
Well, we're in a different world in a lot of ways, including conflict that is outbroken in multiple theaters, including, of course, the war in Ukraine, which J.D. Vance has not expressed support for continuing to fund. In fact, when he was on Fox News last night, we played a little bit earlier in the program, this idea that he was like, we need to focus on China. Forget about the conflict in Ukraine. China, he said, is the biggest threat facing the United States. I ask you this as the son of immigrants from Taiwan.
Yeah.
Do you agree with that sentiment? What should we expect to see when it comes to China policy from this ticket?
First of all, I would hope as the greatest country on earth, we could walk and chew gum at the same time, meaning that we could attend to both of these really significant issues. There is no question, though, Senator Vance is absolutely right, that China is the single biggest foreign policy and national security issue that we have to face over the next several years. I think if this administration continues some of the policy work we saw in the first Trump administration, we'll be in very good stead. I think one of the areas where I believe the Biden administration has really let down the American people is in having a more coherent set of strategic goals around our engagement with China, or lack thereof. So I do think that what this potential Trump administration will bring, I would hope, is a more coherent perspective on where are we trying to get to with China? What's the eventual goal? And that also implicates issues like Taiwan, specifically human rights, if that's going to be an issue. And then most importantly, probably for the audience here, trade and economic issues.
Nikki Haley is speaking tonight.
Yeah.
At the convention. I suspect you might be in the hall. Will she channel Mitt Romney or Donald Trump?
I think she'll channel Nikki Haley.
Yeah.
I mean, she's managed to
where
navigate.
I'm going here.
Yeah, no, I understand. But here's the thing. She has the capacity to help unite the Republican Party. By the way, the Republican Party is the most united I've seen it in a while around candidate and former President Trump. But I think Nikki Haley has the potential to speak to maybe that small sliver that's still disaffected. But she goes beyond that. She speaks to independents. She speaks to people who haven't made a decision in this election yet. And I think she's got a tremendous ability to speak to all of the issues we've talked about. I mean, seeing her as a presidential candidate up close during that election that we've just had, she's a very skilled communicator and potentially a very great asset to the Trump-Vance ticket.
Of course, she might be a little bit disappointed herself as she considers 2028 now that J.D. Vance has been the vice presidential
A lifetime away.
Nominee. Surely it is. And as we have learned in recent days, literally anything possible can happen. And on that note, after the attempted assassination last weekend on Donald Trump, he has said himself he is reworking the speech he will give on Thursday, that he wants to focus on unity. I guess my question to you would be, knowing and having watched Donald Trump for all these years now, do you believe that unity message can actually stick for the next 3.5 months?
We'll see if it does or not. I mean, I think politicians tend to sort of go back to form pretty often and in a comfort spot, but Donald Trump's not a typical politician, right? So he very well could. He very well could. Not unusual, by the way, for a convention speech to be reworked up until the end. I mean, so it doesn't surprise me that they're still looking at what to do with it. But he has an opportunity, if he continues on this theme, to truly move the country forward, and I think to gain the support of people who may have been skeptical of him before. So I think the political opportunity is irresistible. If you think about the ways in which they might position this speech or think about what the speech can do. So I don't want to make any predictions. I'm not part of the process, but we'll see what happens.
Great conversation.
Thank you.
Great to spend some time with you here at the convention. Lonnie Chen, we thank you for being with us on Balance of Power on Bloomberg TV and Radio. I'm Joe Matthew alongside Kaylee Lyons with much more to follow. Coming up, our conversation with Senator Bill Hagerty of Tennessee. It's coming up next on a special Balance of Power on Bloomberg, live from the Republican National Convention in Milwaukee. Welcome back to Balance of Power on Bloomberg TV and radio. We're live in Milwaukee at the Republican National Convention. I'm Joe Matthew, alongside Kaylee Lines. With some new polling out today, YouGov and VCU's latest polls show Donald Trump leading President Biden in Virginia, and to that extent, in all 7 of the swing states that we've been talking about at length here, that we feature in our own polling. 2 to 7 points for Donald Trump in these states, Kaylee.
Yeah, there is not a single swing state, according to the YouGov polling, that Joe Biden is winning right now, which is pretty incredible. But of course, the conversation we continue to have is whether or not that list may actually be expanding. We've been thinking about it as 7, but is it potentially 8 or more? It's not just Virginia we're paying attention to. Arguably, you could say the same about Minnesota if you're listening to the Trump campaign. There's even been questions about New York. And now that we know who is joining Donald Trump on the ticket, and we still believe Joe Biden to be the Democratic nominee, that he is going to push forward in that way. The question is, do you actually start to see that showing up in polling in a more material way?
Yeah, does the map start to morph? Let's assemble our panel. Rick Davis from Stone Court Capital is with us, and Jeannie Shanzano of Iona University, Bloomberg Politics contributors, to talk about these latest numbers and what's coming up next here at this Republican National Convention. What's your thought on this, Rick? I know that you're a critic of national polls, but we have some important swing state numbers here. Do you believe the map is being shaken up?
Yeah, I think the map is pretty solid, right? I mean, not much has moved really for the last year. It's plus or minus the margin of error in almost every one of these states. Some are closer than others. There's no question that there's a appreciative deterioration of Biden's numbers since the debate. There's no question that some of his base, especially young black men, are starting to move over. What was particularly interesting to me in this Virginia poll, the VCU poll, was that Biden has really lost support amongst black voters. I mean, he was at the last poll 67% black support, and now he's down at, in the mid 40s. That is a big chunk of your base coming right off.
Yeah. We should note about the VCU poll, just so our viewers and listeners are informed on all the information. This poll was conducted between June 24th and July 3rd. So for at least part of it, the debate had not yet happened. So we also have to consider that aspect of it. Potentially, you could argue that may have made it more favorable to Biden than it otherwise would have been. Jeannie, on the YouGov polling, though, what's so fascinating is obviously we know that Joe Biden has been struggling more in the Sun Belt. That is borne out in the polling of those states. Arizona, there is a 7-point gulf between Trump and Biden. But Pennsylvania, 3-point difference, obviously in favor of Trump, 2 points in favor of Trump in Michigan, yes, within the margin of error. But the conversation we're having around J.D. Vance is that in the Rust Belt, in those exact states, that may be where his appeal is greatest. So if you're the Biden campaign, are you kind of freaking out about that right now?
These are not good numbers. Let me just try to be a little bit more positive, though. We are 4 months out, and the 7 states they polled, 2 are outside of the margin of error. But to everybody's point, these are not the numbers you want to see if you were the Biden campaign. The pick of J.D. Vance, the Republicans feel that maybe that does help them take or pick up in states like Michigan, Wisconsin. Obviously, they already win Ohio and Pennsylvania. So that is troubling. I would just say that for the Biden team, these are the darkest times that we have seen in an election, to Rick's point, that has been otherwise, politically stable. And I go back to Doug Sosnick's great piece where he looked at these numbers and he said, right now, it looks like if the election were held today, Donald Trump could have the biggest electoral victory since 2008. Sorry, Rick, I'm sorry to say that. So those are very, very troubling times. And we don't see many signs of it getting better. But again, we are 4 months out. But these certainly are not the numbers the Biden team needs to see or wants to see. That's why they had the debate early. They wanted to shake it up. And theoretically, maybe it got shook up in the wrong direction. We don't know yet because we haven't seen a lot of polling.
Crime and immigration, the themes on this second day of the RNC. And Rick, we're going to get a primetime address from Nikki Haley, which is going to be interesting. I'll try to qualify that as primetime. We'll see what the actual timing is on this. We've been talking, until you joined us here, about this push and pull between the old line Republican Party and what is now MAGA. She's the closest thing to the old GOP we're going to probably hear from this week. What's she going to say?
Yeah, look, I think what she said on the stump is predictable of what she'll say tonight. One, probably focus on foreign policy, even though tonight's theme is security, as you point out. I think she'll brandish her credentials as an internationalist. it won't sound so protectionist as what you'll probably hear from other Trump supporters who are going to be on a podium. She'll protect her image by, being true to her views. And so I would suspect, as we've been talking all week, the one unifier within the party and even with Democrats is China. So I suspect she'll take a swing at the Chinese and what's going on in the South China Sea right now, which is almost at critical levels. And probably just a little bit of domestic politics to check the box for the Trump folks. So, but you're right. I mean, I think a lot of people up until yesterday thought of her as maybe she's still the future of the Republican Party. Trump's not going to be running after this term if he is elected. And when J.D. Vance was put on the ticket, I think that dashed the hopes of most of the Haley people to think that there's a real future in it for her now. Yeah. So.
Well, when Haley dropped out of the race after Super Tuesday, she specifically said it was up to Donald Trump to earn the votes of those that voted for her during the primary process. Does he earn any of those votes with the selection of J.D. Vance?
With the selection of J.D. Vance, absolutely not. I mean, and I would contend that even him on the ticket isn't really addressing the Rust Belt strategy they have, because they have to win suburbs, and his rhetoric is not sort of tailor-made for that. He's great on working-class rural voters, but they've kind of gotten all they're going to get out of that turnip. So it'll be interesting to see how they modulate him in his speech, J.D. Vance's speech on Wednesday night. Does he do more to reach out to those swing voters in suburbs?
What does it tell us if Nikki Haley is booed tonight, and how should she respond?
It was fascinating to me. If you guys read the piece in The Atlantic by Tim Alberta of the two Trump campaign managers, they almost said specifically, they are not half that interested in those women suburban voters. They are digging down on the MAGA crowd. They are digging down on the future of the party, which they believe is Donald Trump. Hence the pick, I think, of J.D. Vance. I think there's a possibility she could get booed. I don't know what will happen there. But I think this is telling about where the Republican Party is headed. They want young men, Latino, Black. They want them to come out on the basis of their frustration with foreign aid, on their basis of frustration with the economy, on their basis of frustration with a government they feel doesn't work. And they are really doubling down on that. And so I'm not sure Nikki Haley is the future of the party that, I think I even said in New Hampshire she might be. Probably just hoping.
New Hampshire feels like 85 million years ago in many ways. We've been talking, obviously, at the executive level about presidential politics as we're at this convention, but especially when we look at the YouGov polling we were just talking about, Trump and Biden, yes, interesting. What's also interesting is they also looked at the Senate races in these same swing states. Arizona, Michigan, Nevada, Pennsylvania, Wisconsin. In each state, the Democratic candidate is running ahead of Biden and leading their Republican opponent by a margin of at least 7 points. So as we have this conversation about whatever Trump and Vance could do, if they ultimately win in November, Congress has to play a role in that too. And in the congressional sense, is it looking as promising for the Republicans that are gathered here in Milwaukee?
It is not, and I think that's one of our big questions. Does the top of the ticket determine what happens in those congressional races? Do people split their vote? And this is one of the reasons Democrats are calling for Joe Biden to step aside, because the Democratic candidates are overperforming. They have been, and they feel that some of them, I shouldn't say all, they are being dragged down by the top of this ticket. If there was a change, maybe they could flourish, if you will, and hold that Senate. So I think this is one of the big stories we're going to be watching.
We're going to be hearing from Ron DeSantis as well, who at one point I don't think was even invited to the convention. Now he's on the speaking program. Rick, is this the most disappointing week since he dropped out of the race for him?
Yeah, that's a really good point. I hadn't actually thought about his state of mind walking into a convention that he had hoped would be speaking Thursday night, not Tuesday night.
And potentially writing off 2028.
And I'm sure writing off 2028. I think the message was very clear from the Trump campaign yesterday. We are investing in J.D. Vance. They even said he's the future of the MAGA movement. Yeah. And so there's no pretending anymore that he isn't going to get, unless something bad goes wrong, Trump doesn't win the election and it's all, fair game for 2028. Yes. But within the party, that's all eyes are on him. So the fact that DeSantis comes in and has a Tuesday night slot, it's got to be a disappointment. But at the end of the day, he'll be in front of a huge crowd. He's got a great chance to impress delegates. This is how you generate a future political option by overperforming, and he's got a pretty high bar to jump over. No short jokes included in that.
I'll leave that there. Rick, just on the subject of Ron DeSantis, after his pretty precipitous decline in the Republican primary, where initially we did think he may have a chance of being the nominee, and then after Iowa, we all know what happened. The conversation we were having at that point was perhaps Donald Trump's politics only work when it is Donald Trump who is trying to run on them. Is it different for J.D. Vance? Can he do what Ron DeSantis could not in trying to adopt MAGA but not being the MAGA man himself?
Yeah, when J.D. Vance got elected, he was not MAGA.
Yeah.
And so the transformation is complete, right? I mean, this is not Star Wars, but it's close. And the reality is he is just as MAGA as Donald Trump. I mean, you know, sometimes you put a candidate on the ticket to make the convention happy and fire up your troops. That's exactly what they did yesterday. There's nobody in that crowd who doesn't think that J.D. Vance is just as MAGA as Donald Trump. And I think J.D. Vance may have, if they win, 4 years to practice, I think, the stage management of MAGA, which Donald Trump not only invented, but took to a totally different level.
Look at the issues, though, as we've been discussing. J.D. Vance is concerned about antitrust. He wants a higher minimum wage. Should Joe Biden start talking about J.D. Vance's Democratic-leaning ideas in some of those cases?
Yeah, I mean, sometimes he's, you know, holding hands practically with somebody like Elizabeth Warren.
Well, that's right.
Yeah, and so it is fascinating. I think it's part of his populist appeal, if you will. But I want to remind everybody that in the last election, his first for Senate, which he won by 6 points, he underperformed everyone else in Ohio. And there has been some really good reporting on that. And some people have argued, and we have to look at the data, some of that may be a result of some of his positions. And I go back to his very strict views on abortion. He doesn't want to open up for exceptions of people who are victimized by rape and incest. That is a very hard sell. So yes, on the financial piece, there is this populist leaning, but he has also embraced this MAGA. Kaylee, I'm going to steal your MAGA man. Did you make that up? That's wonderful.
I may have. I'm not sure. I'm sure someone else has used that before.
But it's a good one because it does describe who he is. And I think that that's going to make, you know, he hasn't been tested on the national level. The vice presidential pick may not matter as much at that stage, but I love you're talking about 28. If he's going to go up there, that's a whole nother ballgame.
Yeah.
Well, as we have the conversation about J.D. Vance's economic policy ideas, and Rick, to what you were just saying about he's going to have 4 years to kind of mold himself more into the likes of Donald Trump, is it not far more likely that J.D. Vance becomes more like Donald Trump, including in his ideas around some of these things, be it competition or even higher taxes for people of higher income, than it is that Donald Trump is influenced by the ideas of J.D. Vance?
No question. I mean, J.D. is pretty much there on all things. And by the way, he will now adopt Donald Trump's position, as ambiguous as it is, on abortion, right? There's no such thing as a J.D. Vance point of view between now and the election. They have to be completely in sync. And if they're lucky enough to get elected, there will never be daylight between Donald Trump and J.D. Vance on an issue. So he will come out of this administration, if they're elected, a carbon copy of Donald Trump.
Okay, so maybe the Trump trade that everybody has been talking about rhetorically on Wall Street is also the Vance trade, if you're thinking about it in that sense. But
the Vance trade.
It doesn't have the same alliterative effect.
A big deal about a running mate being announced, have we?
No. Has been exciting, though. And Rick Davis of Stonecourt Capital and Jeannie Shanzano of Iona University are here with us through this, of course. They'll be back with us later on in the program. First, though, let's see what's happening in those financial markets. Bloomberg's Abigail Doolittle is joining us with a look at the latest. Abigail?
Well, Kelly, we were just talking about that Trump trade, or maybe the Vance trade. Let's take a look at it, because there has been some sense that it is on the decline today. That's because DJT, or Trump Media and Entertainment's down about 9%. But I would argue beneath the surface, it's alive, kicking, and very well. Over the last 2 days, DJT up more than 20%. The Trump trade essentially is a quick way of seeing what markets think is the former president, Donald Trump, will he be reelected? And given all of the green on the screen relative to sectors and stocks that could do well under his overall policies, let's just abbreviate that by saying protectionism, economic populism. We have trains higher, shown by Old Dominion. We have trucking higher, JB Hunt up another day. We also have private prisons higher, private education. In fact, Chegg soaring up 14.3%, Morgan Stanley giving a nod of approval. And this whole Trump trade, of course, was really boosted after the assassination attempt over the weekend, Donald Trump's resilient response to it. The broader point here, though, is certainty. Investors want certainty. So going into the debate a few weeks ago, there was basically a 5% betting odd. Now, according to Predictit, Donald Trump has a 69% chance of being reelected. Joe Biden, the current president, of course, is at 28%. That is a huge spread. And after the debate, talk of Kamala, she's at 10% right now. So clearly the money, it is going with former President Trump. And that's also the case if we follow the money relative to the most highly taxed companies in the world on an absolute basis. Over the last month, or roughly since that debate, you have Apple, Microsoft, Berkshire Hathaway, along with ExxonMobil, all solidly higher. Again, Kaylee, suggesting that the Trump trade is doing quite well in a vote in some ways from the markets for the former president.
All right, Bloomberg's Abigail Doolittle with a look at those markets. Thank you so much. In New York, of course, while we're here in Milwaukee, and we sat down here just moments ago with Republican Senator Bill Hagerty of Tennessee, who joined us in studio, and we started by asking him about the impact of the selection of J.D. Vance as the vice presidential nominee on the race.
I think the business community needs to look at the overall ticket and look at the potential of what's going to happen in November. The momentum and the groundswell, and I think J.D. brings a tremendous amount to this. He's going to help President Trump win in November. And the policies that President Trump will implement, if the business community just looks back to President Trump's prior administration, you think about the Tax Cuts and Jobs Act, the impact on this sclerotic regulatory framework that's in place. This will give us a chance to go back in and make the United States a far more friendly business environment in general. With respect to Senator Vance's particular points of view and perspectives, I'm not going to comment on his behalf on those, and he'll consolidate all of that, I'm certain, with the president's platform going forward. But I do think that, broadly speaking, J.D. is going to help the president in terms of cementing support here in America. He's going to bring people together that I think is just an incredibly brilliant pick. You think about President Trump, who has actually been such a great defender of the forgotten men and women here in America. And JD's lived the life that they've experienced. And together, I think they're going to cut across demographic groups. I think it's going to be a massively impactful pick that will help see a change in November that the business community should welcome.
To Kaylee's point, though, J.D. Vance's economic priorities include tariffs, a higher minimum wage, and antitrust, which doesn't sound like the economic policies of the grand old party. Is this the new Republican economic platform?
Well, the Republican Party certainly is moving in a way that is embracing the challenges that Americans feel today.
Is it embracing economic populism?
Well, I think that's one way to phrase it. Yeah. But if you think about what Americans are experiencing, we've seen inflation that's really been through the roof. Gasoline prices, food prices up 40%, over 20%, real wages down 4%. When President Trump was in office before, every demographic sector was moving up. They were improving blue collar better than white collar. So there's a real appetite and hunger to see that sort of success again. And I think that's exactly what you're going to see in terms of the policies that will emerge from the eventual Trump administration.
Do you think that that policy, especially when it comes to things like trade and tariffs that J.D. Vance also has advocated for in addition to Donald Trump, essentially cements that if they were to win in November, tariffs will be higher?
I think tariffs are certainly going to be on the agenda because what we have is a situation right now on a global basis where we do not have reciprocal trade. The term free trade has been misused so many times. And what we have here in America is one of the most open markets in the world. If you look at our tariff rates, certainly compared to other nations that are our trading partners. We have countries like China that don't play by the rules at all. And one of the most potent tools to deal with this is tariffs. And I fully expect that I saw it in the previous Trump administration. I worked very closely with Bob Lighthizer and his team because the same team that put the phase 1 tariffs in place on China worked closely with me on the free trade agreement that we negotiated and got executed with Japan. There are real issues there that need to be addressed. So I look forward to seeing it addressed myself.
have to note that the national debt is not mentioned in the new party platform. When we talk about tariffs, the potential inflationary impact, making the 2017 Trump tax cuts permanent, you've seen all the economic reports, and we've even talked about them right here on Bloomberg with you, Senator, that this would add an enormous amount to the federal debt. How do you square this as someone we consider to be a traditional Republican?
Yeah, I have a very optimistic view about this, and I think that a lot of the CBO scoring doesn't take into account the fact that the policies, whether they be tax policies or regulatory policies that encourage capital investment, actually have the effect of growing the economy, and in a dynamic way have the effect of increasing the tax base. We saw this happen after the 2017 Tax Cuts and Jobs Act was put in place. So I see real potential to grow the economy, and I also say this, and President Trump and I have talked about this on numerous occasions, there are great opportunities to cut spending. What we have in Washington is a huge spending problem. And coming in and taking a very focused and deliberate view toward some of the waste and mismanagement that I see across the board, it's going to be a combination of factors that will be required to begin to get our debt moving in the right direction. But as that begins to happen, I think that we'll see even further economic growth as confidence comes into the system.
I understand the argument that you and many of your colleagues make when it comes to the fact that you could see greater return from the growth that is spurred by tax cuts. Does that mean, though, that no pay-fors are necessary? If we could just get specific about what it is that you would cut in order to offset, or where this will be paid for, other than just this general idea of growth.
Oh, there are plenty of places I think we could cut. Look at some of the programs that were put in place for these multi-trillion-dollar, totally partisan bills that were passed back in 2021 by the Democrats. You think about $80 billion going to the IRS to come and snoop on Americans. There are places we've already started to cut back on that. There are places like that that we can cut immediately, and I think we'll continue to dig in and find opportunities. President Trump will challenge each of his cabinet secretaries and agency heads to find those opportunities. I've lived this at a state level. I was Commerce Secretary of my home state. We cut a tremendous amount of funding out, saved money, found waste and sclerosis, and took it out.
The Committee for a Responsible Federal Budget had a palpitation when they saw this plan and ran the numbers themselves. And the message from Maya McGinnis, who I know you know there, was you can't get to this with $1 billion here, $1 billion there. This will require entitlement reform. You have to get to Medicare and Social Security. J.D. Vance doesn't want to touch Social Security, and Donald Trump has said that he will not either. Do you?
Well, here's what I think people miss. We're talking about mandatory versus discretionary spending. And most of my colleagues and I spend all of our time on discretionary spending. But there's a huge chunk of mandatory spending that has nothing to do with Medicare, Medicaid, or Social Security. And even more was added to it through the 2021 partisan reconciliation bills. We need to go and take an extremely hard look at these mandatory spending obligations that we have that have nothing to do with people's retirement, their Social Security, their Medicare or Medicaid, and begin to address that. We can make significant headway, again, on both the mandatory side as well as the discretionary side, and still abide by the pledge not to touch Medicare, Medicaid, or Social Security.
I'd also like to ask you about cryptocurrencies, given your role on the Banking Committee, but also knowing that Senator J.D. Vance is from Ohio, a state in which the chairman of the Banking Committee, Sherrod Brown, is in a tough re-election fight against a pro-crypto candidate, Bernie Moreno. And I wonder if J.D. Vance entering the race puts crypto more into the actual fore of this election cycle. How do you expect it to play in, not just in the race that could define the next chair or ranking member of the Banking Committee, but more broadly?
Well, I certainly hope it puts it into play. I think crypto technology is a defining point in this election. If you like centralized control over your financial transactions, that's exactly where Sherrod Brown and the Democrats and this White House administration have been. They have been incredibly hostile toward crypto technology. If you like a decentralized option that allows for more freedom and liberty and also supports some of the greatest technology innovations that I've seen since the development of the internet, I think you're going to be supporting President Trump and J.D. Vance. J.D. has a great deal of experience in Silicon Valley. I think he possesses the great capacity to see this potential here. President Trump and I have spent a significant amount of time talking about the crypto technology industry and the potential that it holds for America. I can tell you, both gentlemen want to see this industry here in America as it evolves. We want to see this innovation happening here because I think it has great potential, great potential. We don't want to see it go offshore. And what we need is a regulatory construct that will allow that, not push it away. And right now, what you have is a choice that would, crush the industry, That's what comes from the SEC right now. That's what comes from, frankly, Democrat members of my own Senate Banking Committee and this administration. We need to move toward the policies that I'm certain we're going to adopt in the Republican administration that will be very favorable toward this industry.
Senator, we have to ask you, of course, about Donald Trump's well-being after what happened last weekend. We were reporting that he was making a lot of phone calls the day after on Sunday.
Yeah.
And you indicated earlier that you were on the other end of the line on one of those calls. What did you talk about?
Yeah, I talked with him Sunday evening for, I don't know, 20, 25 minutes, and he was immediately talked about how divine intervention played a role in this. And if you think about how close he came to being assassinated, it's just, I fully appreciate the hand of God that watched for him. But he immediately talked about the father of two, the firefighter that lost his life, leaving a family without a dad, those that were injured on stage there that day. He has very real concern for that. I was with Kid Rock that night, and we got on stage together and really fired up the crowd to go to the GoFundMe site to support those people, their families, and in a terrible time for them. President Trump was not surprising to me at all. He's always been that way in terms of his care and concern for others. That was the top of the conversation. Mm-hmm. And then we talked about how things are going to move forward. And I really think that the public is shocked by what happened. I think it shocked us all to our core. And we need resilience, we need strength. And when he came up with his fist raised in the air, I think that's a picture that's going to be one of the most iconic in the world. America needs a strong leader right now. The world needs a strong leader right now. I speak with world leaders very often, given my role in the Foreign Relations Committee and the fact that I served in the previous administration as a diplomat. There is a great need for a strong America right now, and I think President Trump is moving right into that lane.
That was Senator Bill Hagerty of Tennessee, the Republican, with us here in Milwaukee on what is day 2 of the Republican National Convention. Really interesting conversation that we typically have in Washington about economic policy. He's gearing up for the next day here. Looking forward to a conversation about crypto that might be a little different than the one happening now.
Absolutely. Donald Trump has really tried to position himself to be a pro-crypto candidate to a large extent. We thought that may have begun with Vivek Ramaswamy, actually, when he dropped out of the primary process and got Donald Trump's ear, but potentially that's something that grows with the addition of J.D. Vance to the ticket.
That's for sure. Let's reassemble our panel. Rick Davis at Stone Court Capital is with us alongside Jeannie Shanzano at Iona University, Bloomberg Politics contributors. What do you make of all this talk about divine intervention? It seems to have gripped this convention.
Yeah, I thought that was such a fascinating part of your discussion because this is something we are hearing from not just Republicans. I mean, if you guys have watched these rallies, and Donald Trump himself said the other day, he seldom turns his head. They seldom put up graphics like they did just a moments before he was shot at. And he believes, and so do many Republicans and Americans, that it was some kind of divine intervention. And he has talked about that openly. And I suspect that's a theme we're going to hear, just like you heard from Senator Hagerty going forward in his talk and in his speech on Thursday night about what he is going to do with the fact that he feels like he had a divine intervention that saved him and what he hopes to take from that. So I thought that part of the discussion was just fascinating. And then, of course, the economic aspects as well.
Yeah, well, just on the divine intervention idea, you heard that from the speakers last night. Congresswoman Marjorie Taylor Greene talking about the hand of God being on Donald Trump. Senator Tim Scott of South Carolina said similar things as well. But on the economic policy, to Jeannie's point, as we had the conversation with the senator, something we've continually asked is we talk about things like tariffs, which were talked about quite extensively last night, which of course was day one focused on the economy. We know that there is a repercussion of higher tariffs, which is higher costs, which is something that Republicans have also been talking about, higher costs under the Biden administration. How do we think about the way that these things kind of run in a circle? And for a voter, do higher tariffs sound as good as or the idea of them sound as good as they actually will be in practice and in the reality? Is this a good message for Republicans to be running with?
Yeah, I think one of the things that Senator Hagerty pointed out is this sort of economic populism. I kind of call it economic realism, because the Republican Party is now the party of working class multicultural voters, right? And so when you think about what a tariff means to them, we're not the party of the country club corporate executives anymore. So tariffs to corporations has a different impact than tariffs to individuals. And sure, it is a tax on individuals, but when you look at the people supporting Donald Trump, they haven't had the run-up in finances that a lot of people have had over the course of the various corrections that we've had. And so they're not so much worried about what the future holds. They're worried about today. And you hear all the time in the focus groups about, I had more money in my pocket under Donald Trump than I do under Joe Biden. And so when you say tariffs, they read that as protecting my economics, not squandering them. And so I think...
Is that being honest with them?
I think they've already made this case, right? I mean, I don't think anybody's actually selling to them that tariffs are somehow going to increase their pay. Right. But they're not paying those taxes. I mean, the reality is they pay them in a really regressive way, cost of goods. And the fact that that's run up so much without a strong tariff regime under the Biden administration, you know, it causes voters to question whether or not all this talk about tariffs is going to make a difference to them.
It's amazing what you just said. Republican Party is the party of working class, multicultural Americans. I thought you were the Democrat here.
No, that's right. And that's why I think, to get back to the conversation about somebody like Nikki Haley and the establishment part of the party, that's not who they are appealing to.
But do you see that as being the case? Because Joe Biden's lost in that world.
You know, I think that's where they are headed. I don't know if they have fully been able to embrace that. But, you know, what I think of is this division between the reality of the numbers and the public opinion polls and how people feel. And you talk to any economist, they will tell you, numbers are pretty good. The market's been strong. Unemployment at a 50-year low. Inflation is moving in the right direction. There are all of these very positive macro signs, and it's not felt on Main Street. And that's one of the challenges for Joe Biden and the Democrats. They have not been able to reach people with these positive numbers. People feel like things are bad, and they are embracing that argument. Sure, there's a lot of things to do, but I think, to your question, there is something that is not honest about this populist argument that they are selling, but that many people on Main Street are buying.
It strikes me, as you talk about Joe Biden, that we are now about an hour into this program from Milwaukee and haven't talked about the sit-down interview he gave with Lester Holt on NBC last night. Does that suggest, Jeannie, and we'll do so more in the next hour, I promise our listeners and viewers, that he didn't accomplish what he intended to with that interview? He didn't steal back the narrative from Donald Trump?
It not only suggests that he did not steal back the narrative from Donald Trump. I think the problem for Joe Biden now is we sort of can only hope that he does no harm when he goes out to these interviews. He didn't do much harm last night. He was very defensive, I thought, with Lester Holt. And so, you know, whereas many Democrats are looking for a moment where he can embrace a huge tragedy in American politics with soaring rhetoric, that's not what we can expect at this point. So to your question, he didn't steal the narrative, far from it. He sort of just, I guess, tread water is the best way to say it.
Well, we'll have more analysis of that interview with Jeannie Shanzano and Rick Davis, our political panel, Bloomberg Politics contributors, in the next hour of Balance of Power. We're also on watch for a verdict in Senator Bob Menendez, the Democrat from New Jersey, trial, where, of course, he actually, in the red headline just crossing the Bloomberg terminal, he has been convicted by that jury at his corruption trial. He, of course, was accused of accepting cash, gold, Mercedes-Benz as bribes. Again, the Democratic senator from New Jersey, Bob Menendez, Joe, guilty in that trial. We'll have more details coming up.
That's right. He pleaded not guilty to 16 federal charges, including bribery, fraud, acting as a foreign agent, and obstruction. Declined to testify in his own defense, and as we learn now, found guilty, convicted here, the senator from New Jersey. We'll have much more on this coming up, Kaylee, in our next hour.
Indeed. So stick with us here in Milwaukee, live from the Republican National Convention on Bloomberg TV and radio.
Connection lost.
Live from the Republican National Convention in Milwaukee, Wisconsin, to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons. Of course, here in Milwaukee, we're spending a lot of time talking about the Republican Party this week after the selection of J.D. Vance as Donald Trump's vice presidential nominee. But it is a Democrat who has just made the news, breaking just moments ago. The Democratic senator from New Jersey, Bob Menendez, has been convicted by a jury in his corruption trial in which he was facing charges related to the FBI seizing 13 gold bars, nearly $500,000 in cash, and a Mercedes-Benz at his home. He has been found guilty, as have two New Jersey businessmen who were accused of bribing him. They have also been convicted. So far, all defendants, Joe, have been convicted on all counts.
A 9-week trial that many people associate with the image of gold bars, Kaylee, and of course the Mercedes-Benz that made so much news during the course of this story. Only 3 days of deliberations. I say only, it took the jury 3 days to get to this point. Recalling the tapes that we heard, Kaylee, the video from Morton's Steakhouse in downtown Washington, D.C., in which they spoke openly about this interference that he has now been found guilty of. The conviction coming 4 months, of course, before Election Day, and likely ending any hope that he had to keep his job.
Yeah, of course, he was no longer going to even try to maintain his seat as a Democrat, instead as an independent. But yes, this guilty verdict probably changes very much politically for Bob Menendez's political future, and that goes before November. It'll be very interesting to hear the response we get from Senate Democrats, who were basically calling for the legal process to play out, not necessarily calling for him to resign as a sitting senator.
That's right.
And so that is one of the questions we will have in the most immediate term. We'll have much more on this later on this hour with our political panel, Rick Davis and Jeannie Shanzano, who are here with us in Milwaukee. But of course, there is a reason why we're here, and it's because of the Republican National Convention, where the big news yesterday was the selection of Senator J.D. Vance from Ohio as Donald Trump's running mate. We want to get more on that now and head over to Bloomberg's Tyler Kendall, who has more details on the junior senator. Hey, Tyler.
Yeah, hey, Kelly. Our Bloomberg audience might first know J.D. Vance is a venture capitalist and a member of the Senate Banking Committee, where he's largely taken a more populist view when it comes to the economy and business. And when we analyze the type of legislation that he has shepherded through that committee, it includes bills that would make it more difficult for big lenders to get bigger. He's also been keen to cut down on credit card fees, and in one move, partnered with Senator Elizabeth Warren, a Democrat from Massachusetts, on a bill to claw back executive compensation in the event of a bank failure. Now, he is a staunch defender of big oil and has pushed big banks against ESG policy commitments. For a sense, here was Senator Vance when the nation's largest Wall Street CEOs last testified on Capitol Hill.
If you guys are going to use the financial power that you've accumulated to go to war against the values of our voters, impoverish our constituents who rely on cheap energy, and destroy the jobs of people who work in the energy sector, why should we listen to you when you come and ask us for a tax break or for reasonable regulations?
Vance has, though, largely been opposed to more financial regulation. For example, he's against the new proposed rule for higher capital rule requirements for big banks. But Joe and Kaylee, interesting to point out that he has actually applauded the FTC's Lena Khan and the Biden administration's push for more regulation and cracking down when it comes to big tech.
Tyler, thank you so much. With us live in Milwaukee, Bloomberg's Tyler Kendall on day 2 here at the RNC. And we're joined now by Governor Mike Dunleavy of Alaska. Governor, it's great to see you. Thank you for joining us here in Milwaukee. We're all sweating a little bit here. It's not quite Alaska weather. I hope you're enjoying it so far. What do you make of this pick, J.D. Vance? So many of us were surprised by it not being a surprise name yesterday. This has been something long in the works.
Oh, well, I think the president is picking somebody that will carry forth his agenda after he leaves office. And while President Trump is in office, obviously J.D. Vance will be a close confidant to the president. He's younger. That'll probably appeal to younger Americans. But I think, I have confidence in the president that he knows what he's doing. I don't know J.D. that well. I know he's a senator from Ohio, but hope to get to know him here in the future after November 5th.
Well, he's only been a senator from Ohio for about a year and a half. He is a political newbie. And I wonder, as a sitting Republican governor, what you think about the idea of a governor who has executive leadership running one of the states in the United States of America, why that selection may not have been made?
Well, keep in mind, President Trump was not elected to any office before he was elected president.
Sure.
And sometimes when you get a perspective outside of government, and I've been outside of government, I've been inside of government, sometimes when you get a perspective outside of government, you carry a perspective of the people into government, as opposed to being a career government official and looking at the world from that perspective. So I think that's what probably factored, at least partly into the decision by the president.
Bring us your unique perspective on energy coming from Alaska and what a Trump 2.0 would mean, because the Biden administration is reminding us on the daily that our output right now, we're pumping more oil and gas than ever in the history of the United States, yet there seems to be this idea that Trump would be friendlier to the energy sector than Joe Biden. What would in fact change?
I think he will. I think he'll be a lot friendlier.
Tell us specifically.
Well, I mean, President Biden has called for a moratorium on shipping gas overseas. That's not going to happen under President Trump.
So that's lifted immediately?
Yeah.
Okay.
In terms of ANWR, which was the National Wildlife Refuge in Alaska on the North Slope, where there is oil and is gas, under the 2017 law that was passed, those leases went up for sale. The Biden administration illegally, and it is true, it's illegally, shut those leases down. That'd be lifted, I believe, under President Trump. And then taking up upwards of 13 million acres of NPRA, National Petroleum Reserve, off the table for oil and gas, I think that'll go back on the table. President Trump was the best president in the history of Alaska from my perspective. When I came into office and I had my first meeting with President Trump, he said to me, "What can I do to help Alaska?" And that was every single meeting. And he probably did more than any other president in the history of the state. President Biden, under his administration, there are approximately 65 actions by the federal government against Alaska, taking land off the table for oil and gas exploration, closing down the Tongass National Forest, not going through with a land exchange to help some of our indigenous people in King Cove be able to get a road out so their people don't have to fight weather with airplanes. The list goes on and on and on. But under our president that we have right now, President Biden, 65 actions. That's more actions against a state than the federal government has against places like Iran. It's incredible.
If we could just continue the energy conversation for a moment longer, what we have heard a lot from Donald Trump and those close to him is this idea that it's just deregulation, unleash American energy, if you will. And he spoke a bit to that idea. But when we think about these oil and gas companies, which we're very familiar with here at Bloomberg, they have to be incentivized to actually spend their capital. Capital discipline has been the name of the game for years. It's about returning it to shareholders, not necessarily investing in new production in a world that is trying to transition to green energy. So beyond just deregulating, does more need to be done to incentivize these businesses to actually drill more in places like Alaska?
If we truly deregulate, that is going to save money. You won't have to spend as much money potentially on permitting and litigation. And to the concept of transition, I really believe that that concept disappeared several months ago. With the advent of new chips from NVIDIA, the Blackwell chip, the whole AI movement, you're going to need 3 to 6 times as much energy as you have now to power those server factories. So I think it's going to be additionality, not transition. You're going to see more discussion about additionality, more wind and solar, more oil and gas, more nuclear, more any type of energy possible. And I think the locales and the countries that win the energy war in that respect are going to win the supercomputing and the AI war too.
If you were the energy secretary, and you can respond to that as you want, how would you approach nuclear? This is something actually we talk about a lot on Bloomberg because of the incredible boom in data centers and AI and the massive amounts of power required. We're talking about now potentially opening data centers on the sites of nuclear power plants. What does the future hold for America and nuclear?
You know, nuclear has had a troubled past, and unfortunately, some of the press it's got, I think, is unwarranted. There's probably been fewer individuals killed or died as a result of nuclear accidents than almost any other type of energy put forward in terms of accidents. But if I were the energy secretary, and we're dreaming here for a moment, I would facilitate a consortium among states, among private industry, provinces in Canada, and maybe other countries to come up with a calendar, for example, on small nukes to say, how many small nukes can we get in the hopper to permit, to design, and to get a whole industry set up behind creating new nuclear facilities across the country. I think that's one of the things that the nuclear industry wants, is they want to know if we're going to begin a process of creating a whole new industry on small nukes, do we have the commitment to actually fund those nukes, pay for those nukes, and site those nukes in various places? So I think that would be a big step.
Governor, I just picked up on the words you used there. We're dreaming here. Are you saying that as another way to say we're speaking hypothetically, or because you actually do dream of being energy secretary?
No. That was hypothetical. I'm just saying for the moment here.
So if Donald Trump offered you that job?
Well, I'd have to have discussions with the president, but I'm looking forward to working with the president, helping the president, and moving this great country forward and Alaska forward.
Have you spoken with him since Saturday?
I spoke with his campaign folks, and I sent him a text. But I also understand that after such a traumatic moment, the president's going to need to talk with his inner circle and his family more so than folks outside.
Did he respond? Was he texting over the weekend?
He was texting with some. Yeah. I got a text back immediately from the campaign chair, so we're in contact.
Yeah.
Well, as we continue to grapple with the aftermath of this weekend, pretty much every person we have talked to, elected official or otherwise, has talked about how the tone of this convention needs to be different as a result. Much more toned down rhetoric, a lowering of the temperature across the board, more of a message of unity. And I just wonder, given what you see in your state or just in your position as a governor, if you see an America that is truly capable of that right now, given how deeply rooted our divisions seem to be.
I do. I think what happened yesterday shook everyone to the core. I really do believe that. I was on the floor yesterday on the convention, and I did not pick up from anyone that there was a attitude or an atmosphere of vindictiveness or quote, going after folks. Quite the opposite. I think people were excited about the possibilities of another Trump administration coming in here November 5th. The discussions were very, I think, positive. And I'm an individual that doesn't really tolerate that type of talk, to be honest with you. I'm not part of that. Don't want to be part of that. And I think the country. I hope the country is at a point now where we start to focus more on policies as opposed to personalities.
Well, today's theme, crime and immigration. If there's any one of these 4 days where the rhetoric could get hot, where the red meat's going out the crowd, I presume it will be today. Do you agree?
Possibly. But I mean, those two topics, crime and immigration, I think are topics that are near and dear to most Americans' hearts. And we are a country of immigrants. But, I believe in a strong wall with many doors. I believe that we should have a strong wall in which we have immigration, in which we're bringing people into this country that want to be Americans, they're going to contribute to America. Unfettered, wide open borders, I think, is a catastrophe for any sovereign in the world, especially this country. And in terms of crime, I think over the last couple of years, we've seen our cities burn. We've seen the homeless issue escalate. I think it's problematic, and I do think a change in administration will bring changes on the ground.
Well, it's interesting to hear you say this as the governor of Alaska, which is perhaps furthest removed from the southern border, at least in a physical sense, as any state can be. To what extent would you say this is the dominant thought of the people that you govern, or is it a different issue?
We are far away, but unfortunately for Alaska, we've had more deaths per capita through fentanyl than any other state in the country. And that fentanyl is coming through the southern border. So just that alone, if we can somehow impact that, affect that in a positive way to reduce that flow, is going to help Alaska. It's going to help every country in the United States, probably Hawaii as well, even though Hawaii is in the middle Pacific. But unfettered borders doesn't help anyone. And as I mentioned, in Alaska's case, the fentanyl coming over the border hurts us as well.
Is that so much a border issue, if I could ask you quickly, or is that actually a China issue at the root?
Probably a combination of both. But if you have a southern border in which there are thousands and thousands and thousands of people coming over, not checked, unfettered, getting into the country, and you have cartels in Mexico, it doesn't take a genius to put two and two together that you're going to have some drug problems.
It's really interesting to hear that that's a long journey from the southern border to Alaska. Talk to us about the path that it takes and the policy needed to stop this?
Just the same way it gets to Minnesota or Maine. You can drive to Alaska. You have to go through Canada. You can fly. You can mail it. You can take it on ships. These people are very creative. As a response to this, we just passed the bill that I signed a week before I came to the convention that increased the penalties for dealing drugs that result in a death to a second-degree murder charge. Because we have to get serious about this. Everybody knows somebody that has been impacted by drugs. Everybody knows somebody that knows somebody in which they may have had a loved one that overdosed on some of these drugs and cut short of very promising lives for these people. We've got to do something about it. The border is part of that solution. Discussions with China is part of that solution as well.
Of course, Senator J.D. Vance has a very personal history with drug abuse in his own family as well. He has talked about that openly. He did so again when discussing fentanyl in his first interview after being named the vice presidential nominee yesterday. As we consider policy that J.D. Vance is likely to adopt, we've been describing him as a populist, an isolationist, potentially just a newer, younger version of Donald Trump. How do you see your party changing as a Republican governor, as we are not just considering President Donald Trump, but potentially a Vice President J.D. Vance, who is very, very similar?
You know, I think, again, time will tell exactly what the new Vice President nominee is really thinking on some of these issues. I tend to know what President Trump is thinking on these issues. The changes that you're referring to the party, I don't know how large or big those changes are really going to be. I think there's going to be some nuances in implementation. I think there's going to be some emphasis on certain policy decisions, but I don't know how great a change. I mean, I think the Republican Party.
But this isn't Mitch McConnell's Republican Party anymore, really?
I think it's America's Republican Party. I think when Donald Trump came in, it became a party of the people as opposed to elected officials, politicos, oligarchs, et cetera.
There are 50,000 people here for this Republican National Convention in Milwaukee. Most of them have never been to Alaska, and I'm guessing will never go. What do you want them to know? What do you want them to know about your city?
Well, from an economic standpoint, Alaska is part of the solution for America. We have the largest oil field in North America, conventional oil field in North America. We have over 100 trillion cubic feet of gas that can help America and our Asian allies. We have 49 of the 50 rare earths that could help the United States be strategically independent of China. We have 1/7 of the country's timber. We have some of the largest fishing ports in North America. No, we're a bastion of freedom. We're the only Republican state left on the West Coast. And we take our freedoms seriously. We're a Second Amendment state unlike any other. We have the highest per capita of retired veterans in the state of Alaska. We have admirals and generals that retired to the state of Alaska. And that we are the fort for Alaska. We're only 2.5 miles from Russia, 50 water miles from Russia. We have the Russians in our airspace that we chase out on a continual basis. We have the Chinese working their ships up through the Bering Strait. So we are a strategic part of this country.
All right, Governor. Well, thank you for spending some of your time here in Wisconsin with us. Maybe one day we will see you in Alaska. That's Governor Mike Dunleavy of Alaska. Thank you so much for joining us. Now, we also want to talk about another state, and that's what just happened in New Jersey. As the news broke within the last 20 minutes, that New Jersey Senator, a Democrat, Bob Menendez, has been found guilty on all counts in his corruption trial. The judge in that case has sent the sentencing for October 29th, Joe. That's for all 3 defendants, as 2 others were charged with Senator Menendez. He faces as much as 20 years on the most serious charges.
This is really something. This broke a short time ago. If you're with us on Bloomberg TV or on YouTube, you see a view of the courthouse, the stakeout set up outside as reporters wait for the next leg in this story. Menendez pleaded not guilty. 16 federal charges, Kaylee: bribery, fraud, acting as a foreign agent, and obstruction. Now we have a guilty verdict.
Yeah, we'll get more reaction on that from our political panel, Rick Davis and Jeannie Shanzano, who are here with us live in Milwaukee, Wisconsin, for our coverage of the Republican National Convention. So stick with us straight ahead, right here on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons alongside Joe Matthew, live in Milwaukee, Wisconsin, where we're following breaking news in New Jersey, the conviction on all counts of Democratic Senator Bob Menendez. And now we have heard, Joe, from the Senate Majority Leader, Chuck Schumer, who has posted on Twitter, in light of this guilty verdict, Senator Menendez must now do what is right for his constituents, the Senate, and our country, and resign.
There you have it from the Majority Leader. A lot of folks, Kaylee, in Washington, a lot of Democrats thought that statement should have come earlier. Let's assemble our political panel now for their take on all of this. Rick Davis at Stone Court Capital, Jeannie Shanzano at Iona University. Does Jeannie, need to step down for the good of the Democratic Party?
He absolutely does. And to your point, many Democrats felt this should have come a long time ago. You know, I live in the tri-state area. Bob Menendez had complaints filed against him in 2006, the year he was elected. He was indicted again in 2015. Those charges dropped, but he was severely admonished by the Senate's Ethics Committee for that. And now, once again, 2023, he is finally convicted. And for the good of the people of New Jersey and for the Democrats, he needs to step down. They've already nominated Andy Kim to run, but Bob Menendez is still running as an independent.
Yeah, and we are seeing, I believe these are live images outside the courthouse in the aftermath of this. If you're watching Bloomberg TV and radio, apparently those aren't live images, but we are seeing pictures of Senator Bob Menendez. Of course, if we do indeed see him and get a reaction to him from this verdict, we'll bring that to all of you. But as we also consider his fate in the Senate, the idea that Democrats are now calling for his resignation after, I believe, all but John Fetterman were reluctant to do so in the last several months, Rick. How hard is it for a Democrat to make the case that Donald Trump is unqualified to serve if he's a convicted felon? If you now have a convicted felon that still could, if he decides not to resign, continue to walk the halls of the U.S. Senate?
Yeah, this is kind of an eyesore for Democrats. It's an unfortunate thing that a United States senator would be convicted of a federal crime. It's only happened 7 times in history. I know it seems like more, but this has been a recurring occasion for Governor Menendez, as Jeannie said. And so, yeah, I think that it's really going to take the leadership of the Senate to insist that he vacate the seat and give them the best chance they can to win. You know, look, I mean, New Jersey could be an interesting state if Donald Trump continues to make progress in this race. He can put states like New Jersey in play. It was very close in 2020. And so I think that Chuck Schumer and the other leaders in the Democratic Party and the Senate really have to press hard. Menendez has nothing to lose. He's convicted. Will be going to prison. And so the question is whether or not he even cares. But Governor Murphy has the ability then to replace. Maybe he puts Andy Kim in as the nominee, can basically serve in the election as an incumbent. Yeah. And remember, Governor Murphy's wife ran against Andy Kim. Maybe she'd like a short stint in the Senate before she retires from politics.
About that. If you're just joining us, Senator Bob Menendez of New Jersey found guilty. This is, of course, the corruption trial that included the gold bars, the Mercedes-Benz, sensational storytelling that made this a front pager here, Jeannie. He's certain to appeal. Should he speak to reporters today to make his case when he comes out?
If I was his lawyer, I would say absolutely not. He needs to defend himself or continue to defend himself. He needs to step aside for the good of the people of New Jersey and deal with his own legal challenge, which are formidable. He's facing 20 years in prison, although to your point, he'll appeal and doubt he would get that much. But let's not forget, chair of the Senate Foreign Relations Committee before he stepped down from that. Yeah. He is charged with taking bribes, Qatar, doing business on behalf of the Egyptian military. This is ugly. To your point, it's also a story that resonates because he's talking about gold bars, convertible Mercedes-Benzes, and blaming his wife, who's also wrapped up in this. It is an ugly story, and it is more than time for the people of New Jersey to get free of this. And to Kaylee, your point, Senator Fetterman, his neighboring, if you will, senator, Democrat, was one of the first to call vocally for him to step aside. Many Democrats didn't join, and now that Chuck Schumer has sort of opened those floodgates just a minute ago, I think we're going to see the calls, and they should be made. He needs to go now. And whether it's Andy Kim or Murphy's wife, I don't think it should be. They need to fill that seat.
Well, as we consider the responses of Democrats here, obviously the senators are most notable, given that it is the body in which Senator Menendez is a member. But what about Joe Biden? How does he handle this? How does he need to handle this? How could it reflect back on him as a potential attack Republicans can use in this cycle?
So for all the reasons you mentioned about he's running against somebody who has been convicted of a felony, he should immediately call for the senator to step aside. There is no place in politics for this. These are ugly charges of which he has now been convicted. He should fight those, and he should not continue to stay. And I think that's what Joe Biden should come out and forcefully say, agreeing with the leader of the Democrats in the Senate. It is time to go. This is not, if you're Joe Biden, he should say who we are as Democrats, and we should not countenance his continuation in the Senate while he tries to defend himself.
Well, the politics are awfully important here. You're not legal analysts, and I wonder, Rick, how you would use this. If you were digging into Oppo and Bob Menendez, how would you leverage this story against Democrats?
Well, I think that you have to be a little careful because every time you bring up, oh, here's a politician who's just been convicted of a federal charge, you're actually reminding everybody that Donald Trump has just been convicted of federal charges. And I think you really don't get much out of it, right? I mean, he's already been convicted in court, but he's also been convicted in the court of public opinion. And so I don't think it really gets you much. I think it's a good thing to play in Washington, D.C. to make Democrats in the Senate look disorganized. Sure. The Democratic Party is in a critical state right now because of the disastrous state of the Joe Biden campaign. So this is just piling on at this stage. And the reality is it's a bad news day for them, but you know, it will go away, and they will focus on the contest in New Jersey in November for the Senate. They desperately need to hold on to that seat in order to retain control. And if I were digging up my oppo on Menendez, it would be so easy because I only had to sit in a court to get everything I needed. That's right.
You mentioned the state of the Biden campaign, Rick. It's worth pointing out that Joe Biden is in Las Vegas today. He was sitting for an interview with BET after sitting for an interview with NBC's Lester Holt yesterday, which aired in prime time, 9 p.m. Eastern, when a lot of people were probably also tuned in to speeches at the Republican convention. He wanted the interview to be about policy, and he made that very clear to Mr. Holt at the very end of the interview. What was your read on his performance? Did he do what he needed to do in terms of damage control, knowing that prior to the assassination attempt this past weekend, all we were talking about is whether or not he was going to drop out?
Yeah, it was a pretty chippy interview on the president's behalf, and I agree with your assessment of that. I think that he needs to understand that when you do interviews, it's not up to you to decide what kind of questions you get. It's up to the interviewer, and he's done so few, maybe he's just out of practice. So I think that it didn't go well for him last night. I mean, it's funny, you wake up this morning, and Joe Biden spent all his time attacking Donald Trump in that interview, and Donald Trump is in Milwaukee asking for unity. I mean, did you ever think that you would face a day like this? So I think that this is more troubling for the campaign, for the Biden campaign. I think after that interview, frankly, you will hear more calls for Biden to step down because they can't, the Democratic Party can't succeed at the top of the ticket with that kind of performance.
Well, it's kind of a Trump mechanism, isn't it, to criticize the journalist for the questions they're asking? Here's what you should be covering. It doesn't play the same way, apparently, when Joe Biden does it.
Yeah, I mean, I just don't think that defensive nature of Lester, why are you asking me this? Ask that. It just doesn't land right. And, you know, the president had a, pretty good period, a couple days in which he was talking about unity and those things. And I thought that the interview last night, he seemed so defensive, so stunned that he was being asked those questions. And so I think at this point for Democrats, it just reinforces a problem that they've had, which is that they can't expect much out of Joe Biden with these appearances. If he can, again, just tread water, that's almost the best they can hope. And what they want is somebody to embrace the moment, a Bill Clinton sort of rhetorical moment. Joe Biden has had those around January 6th. We've seen those Ronald Reagan. They want that after the attempted assassination of a presidential candidate. And they haven't gotten it out of Joe Biden, nor can they expect to at this point.
All right, well, we've talked about it at length already, so we should probably give our listeners and viewers a little taste of that interview, Joe Biden sitting down with Lester Holt on NBC last night.
We knew this was going to be a close race from the moment he announced. I think one of the arguments that get made, you have the most successful presidency of any president in modern history, maybe since Franklin Roosevelt. Passed more major legislation no one thought could get done. We're able to put together consensus. We're able to unite NATO. We're able to deal in foreign policy. Why don't you just decide to rest on those laurels? And the answer is because the job's not finished.
He's talking there about his efforts to unite NATO, to add to it under his presidency. Here in Milwaukee, the Republicans are talking about unity as well. But frankly, what we're talking about is a Republican Party that already is very much unified around Donald Trump by and large. And we saw that on full display on the convention floor. We cannot say the same about the Democratic Party around Joe Biden right now. And for all the conversation, Rick, of the assassination attempt of this past weekend, whether or not that actually may have saved Joe Biden's reelection effort, do you think that that conversation is still alive?
Absolutely. As I said, after last night's performance with Lester Holt, there are going to be Democrats scratching their heads saying, how in the world are we going to be able to mount a campaign if this is the product? They spent all day preparing for this. This was his idea, President Biden's idea, and I thought it was a big flop, especially in the contrast with, as you say, what's going on here in Milwaukee with the Republican Party. And there are a lot of down-ticket races, Senate races, House races, the Democrats have already started focusing on, and they realize they're stuck in the mud if they can't fix the top of the ticket.
So you've got another interview today is out in Las Vegas. There's more West Coast travel to try to counter-program the RNC here. What kind of travel is he going to be up to during the course of this campaign? And are down-ballot candidates going to want to share a stage with Joe Biden?
You know, at this point, when you look at the polls, arguably the down-ballot candidates will not. I am not a fan of that, by the way. I think that is always a mistake. But I think embrace the incumbent. But it's a tough decision when you look at these polls and they're running ahead of him. In terms of travel, he did not have a very robust travel schedule in 2020 because of COVID, which seemed to help him. Now he doesn't have COVID, and so he's got to be out there. And you listen to that interview, and the best Democrats can hope for at this point, which is Joe Biden doesn't do any harm. And that is a very, very tough position to be in when his poll numbers are what they are. You look at Donald Trump, you look at J.D. Vance, you look at their issues alone. A Democratic candidate who can make this case should be doing much better in these polls. And Joe Biden, unfortunately, who promised to be a transitional candidate or president, is not. And that is why I agree with Rick. The calls for him to step down are still coming.
All right. Great panel and a great conversation, as always. They're with us for the week. Here in Milwaukee, Rick Davis, Stone Court Capital, Jeannie Shanzano of Iona University, our signature panel here on Balance of Power. As we turn our attention to the financial markets now, we want to see how things are working as we focus on politics here in Milwaukee. We've got a lot more of our coverage coming up. Bloomberg's Abigail Doolittle joins us now from New York. Abigail, what are you looking at?
Joe, there's a really interesting split that we're seeing right now for markets, and that is specifically that we have the S&P 500 and even more so the Dow Jones Industrial Average trading to the upside. On the other hand, big tech is down. So we've been talking a lot about the Trump trade, or sectors and stocks that would benefit potentially from the former president's economic populism and protectionist policy. But now, as you were talking about last hour, there's also the Vance trade to consider, specifically around big tech. He has signaled that perhaps he will support a crackdown on big tech, openly praising FTC Chair Lina Khan. And so these big tech names, a lot of them, NVIDIA, Meta, Google, they are down sharply, down more than 1%, down for a second day in a row. This, of course, is the real engine of the market from a point standpoint. So if this trend continues, we are going to see this rotation out of big tech and into some more of the value-oriented names that we looked at last hour, such as the stocks behind the Dow transports, insurers, healthcare, banks, and the like. So that would be pretty healthy. As for DJT itself, or of course, Trump Media and Entertainment, down about 9% on the day. Since the debate, to smooth out the moves a little bit, because lots of volatility, not surprisingly, volatility associated, of course, with the former president in many ways. We do have it up about 33%, but lots of big moves after yesterday's greater than 30% move. Yesterday, the today down almost 10%. So again, volatility there. And then Kaylee, finally, if we are over the last 5 days to go a little bit more macro, Bitcoin, that's higher. And of course, that would be a sign of the Trump trade because the former president is considered to be pro-Bitcoin. On the other hand, it's interesting. I was surprised by this. The dollar relative to the Mexican peso losing some ground. Yesterday, the dollar is losing ground today. Yesterday, gaining ground. Of course, his last term, the former president, not easy on Mexico. And then finally, I threw in Tesla. This isn't entirely fair, but on the day, it is down about 2%, Kaylee. Over the last couple of weeks, it's up about 40%. But Elon Musk, of course, stepping out as one of the former president's most ardent supporters.
All right, Bloomberg's Abigail Doolittle in New York. Thank you so much. Now, as she was talking about this idea of Trump trades and Bitcoin being one of them, it's worth pointing out Donald Trump has pledged to promote Bitcoin mining in the U.S., which has made crypto investors eager to learn more about his potential policies. This is also something we discussed earlier today here in Milwaukee with Senator Bill Hagerty, the Republican on the Banking Committee, who talked about his conversations he's had with Donald Trump when it comes to crypto. So what exactly could that look like? Let's get more with Nathan Dean of Bloomberg Intelligence, who looks at U.S. policy for us. He's joining us from Washington. So, Nathan, when we talk about what a crypto-friendly president or administration would look like, are we essentially talking about one in which the SEC just has less power to regulate by enforcement?
Yeah, exactly. I mean, I think there's two scenarios here. The first scenario is J.D. Vance is one of the first candidates we've seen to have such a substantial amount of crypto holdings. I mean, in his last disclosure, he had at least $100,000 worth of Bitcoin. And there's been talk that Senator Vance is actually pushing legislation right now that is more industry friendly than what House legislation came out earlier this year. The idea here is taking away a little bit more of the focus of crypto from the SEC and potentially giving it to the Commodity Futures Trading Commission, which is where a lot of the crypto world wants. So I think in terms of like Bitcoin and also just other crypto platforms, like Coinbase in particular, a J.D. Vance presidency, if President Trump decides to delegate additional authorities to the vice president and say, here, go play in the crypto space, it could be good for the sector.
Nathan, your phone's always ringing, which we love asking you about. When your clients call terminal users with questions, with concerns, what were the questions and concerns you heard after this appointment?
So it really comes down to Senator Vance's economic populism aspect, because I think a lot of people just presume Republicans equal this or Republicans equal that. And with Senator Vance, it's a little bit more complicated. For example, Senator Vance has been somewhat tough on banks. He has co-sponsored legislation with Senator Elizabeth Warren to claw back incentive compensation plans from the biggest banks. He's worked with Senator Sherrod Brown on railway safety. He's a co-sponsor of Senator Durbin's Credit Card Competition Act. This is the one that will actually take away a lot of money from the banking sector. So he has a mixed record. But on the same side, he's also very much a populist in terms of calling for the Basel III endgame to be done away with, this idea of higher capital requirements. So I wouldn't say that the vice president is always the most catalyst moving or changing pick in terms of policy. But if we get into a scenario where if President Trump wins in November and he decides that he doesn't want to focus on financial regulation and so forth, Senator Vance could have a very powerful position to play there.
I wonder, Nathan, if the real question for terminal users, market participants, isn't as much about the impact that Senator Vance could have if he becomes Vice President Vance in a second Trump administration in the near to medium term, but more like what the selection of J.D. Vance actually means for the likely trajectory of Republican economic policy for years moving forward, potentially, as we consider he's a 39-year-old. We've been talking today about whether or not this marks the end of the old Republican Party and the official establishment of the new right in which economic populism is a forefront issue. What do you think about that?
Yeah, so I think there's a short-term and a long-term aspect to this. So the short-term is that Senator Vance, like we've just been talking about, will probably be influencing the president if they are elected on things like trades and tariffs. Senator Vance has said multiple times that China is the #1 issue for the United States. So, because the power of the presidency is a lot more powerful there, I think that there's certainly from a market participant perspective, that trade, that tariff debate and so forth should be at the forefront of any market participant as they're assessing their portfolio. But then longer term, how does this play out with the Republican Party? You know, we saw a gentleman from the Teamsters yesterday speak at the Republican National Convention. That sort of flies in the idea of President Biden being the union candidate. So I think that, you know, we are seeing, you know, the changing of the parties, and it's this idea of corporate America versus, you know, this economic populism movement. And look, it's not going away. It's just something that we're going to have to deal with for many, many years to come.
It's something that we're talking about as the Trump trade, Nathan. It usually involves crypto, DJT, solar stocks, maybe you throw banks in there or something. But is the Trump trade real? And if it is, does it outlast this brief period that we're in now?
So I think the idea of the Trump trade is really depending on your time frame. So obviously we've seen prison stocks, private prison stocks move off of this. But that's such a short-term catalyst because that is just at the high idea or the high-level idea of President Trump equals this policy, and therefore private prison stocks would move up. But I think it's really long-term. How does President Trump, if elected, would implement his policy? Is it legislation? Well, things aren't really going to get done in Congress no matter what happens in the election next year. Is it tax reform? Well, if the House and the Senate goes Republican and President Trump wins, then there is this opportunity for tax reform in terms of the reconciliation. Is it regulation or is it executive order? So think about how these policies actually work out, and you'll get a better time frame. In terms of things we're looking at, investment banks, that's the regulatory angle. If President Trump wins, the Basel III endgame is mostly gone. If he also wins, electric vehicles like Tesla and Rivian will be exposed. But that's also more likely a headline risk associated with executive orders telling the Treasury Department to alter tax credits there. So it really depends, but we have 5 sectors to watch right now in a Trump presidency. It's investment banks, big tech, electric vehicles, manufacturers, and go from there.
All right, Bloomberg Intelligence's Nathan Dean, thank you so much. We do want to go live to outside the courthouse in New York, where Senator Bob Menendez has just been convicted on all counts with which he is charged. His attorneys are speaking now as the senator stands behind them, as you can see on Bloomberg TV. Let's take a quick listen.
And we're going to pursue all appellate avenues aggressively, and we do expect he will be vindicated. Thank you. Senator, they go to resign.
And that was very quick. As expected, Joe, they are going to appeal this verdict. But of course, as we await that appeal process to actually play out, he already is facing calls from within his own party to resign the current position that he holds in the U.S. Senate. The Senate Majority Leader, Chuck Schumer, has said as much. And actually a statement that came in from the governor of New Jersey, Phil Murphy, says if he refuses to vacate his office, I call on the U.S. Senate to vote to expel him.
Yeah, there are going to be more where these came from, even as he appeals this verdict, which we should, of course, remind everyone. He pleaded not guilty to all 16 counts and is promising an appeal. So this story is not over from a legal standpoint, Kaylee. It kind of feels like politically it is.
Well, we'll see what the senator does in the coming days. But as we've been discussing, and especially as we're having this discussion from here in Milwaukee, where Donald Trump has been formally nominated to be the Republican nominee, something he will accept later on this week, when the Democratic Party is positioning a lot of their argument against why he should be not elected in November is because he is in part a convicted felon. So now when you have one of your own who, too, is now a convicted felon, that messaging gets incredibly complicated.
Yeah. That's for sure. This is just a story that emerged a short time ago since we came to air, as a matter of fact. At noontime Eastern, Senator Bob Menendez found guilty of corruption charges. This brings us back to the seizure of gold bars that so many people were talking about, and nearly $500,000 in cash, of course, the Mercedes-Benz. He just said, Kaylee, he has never been a foreign agent, remembering that he was accused of and now found guilty of working on behalf of the Egyptian government. His interactions with Qatar for a former chair of the Senate Foreign Relations Committee is quite remarkable to consider. If you're with us on Bloomberg TV or on YouTube, images of that FBI seizure, the cash, the gold bars that were found in his home, will be the enduring images and memories that a lot of people have of this trial.
Absolutely. It really is just so remarkable. And of course, during the course of this trial, the senator did blame a lot of that activity on his wife, Nadine, who also has been charged. Her trial has been delayed as she grapples with breast cancer treatments, but that is another way in which this will continue to be in the spotlight as her own trial plays out. So it's hard to see how this issue goes away for the senator in the immediate term as he goes through this appeal process.
October 29 is the sentencing date the judge announced today for Menendez and his two co-defendants, also found guilty. The question, of course, will be the political ramifications here, Kaylee, with now Chuck Schumer calling on Bob Menendez to step down, to leave the Senate, and of course the implications that would follow. I want to add a voice, no stranger to New Jersey politics or Washington, and that's Lisa Cabuso Miller, former RNC communications director and host of the Friday Reporter podcast. Lisa, thanks for jumping on with us here on this breaker. Does Bob Menendez need to step down and leave Washington now?
Yeah, there's no doubt about it, Joe. I mean, this is something that is going to be distracting to the district. It's going to be distracting to the state. And it's the kind of thing that if Senator Menendez really values the voice of the voters in the state, he should step aside and he should deal with this issue himself outside of the Senate. Also, too, there's a question of integrity. I mean, really, the integrity of the office and the importance of having a voice of good reason there is very critical.
Well, certainly, especially as we consider what Joe was just pointing out, the role that he had on the Foreign Relations Committee in the Senate, the idea that he still was being briefed on information that isn't necessarily shared with the American public. When we do the debrief on this in the aftermath, whether or not he decides to try to fight for his seat in the Senate, gets expelled, resigns, what have you, Lisa, was this actually also a national security failure?
There's no question about that, Kaylee. I mean, it's the kind of thing that he did step aside, and I know that there were some surrenders that he made of his own power that he had in the committee when this first came through. But it's the kind of thing now that I think more than anything else, I mean, he has to see this not just for himself and for the district that he represents, but also so the integrity of the Democrat Party at this point. I mean, it adds into the broader narrative, the narrative about the president, the narrative about the Democrats and how they perceive these kinds of positions of power. It's not very helpful that it's happening right before Election Day. And it's the kind of thing that people will be paying attention to. And it adds another layer of challenge for the Democrats as it goes into Election Day.
Well, how would you message that if that was your job right now, Lisa? How does Joe Biden distance himself from this as he continues to criticize Donald Trump as a convicted felon?
I think the Senate leader did exactly what he needed to do. Leader Schumer did exactly what was necessary, and that was to call on him to step aside and step down. It takes the pressure off the president in order to have to message around that. It's definitely in Chuck Schumer's purview and in his power and really in his best interest to have Senator Menendez step down and step out of the Senate. And so that alone, I think, is really sort of good leadership on the side of Senator Schumer and the leadership in the Senate on the Democrat side in order to take that distraction out of the way, because certainly the timing on this is just terrible for them.
Well, Lisa, speaking of timing, of course, this news drops in the middle on day 2 of the Republican National Convention, knowing that you served as the RNC communications director in your former role. I would love to hear from you on just the tone shift that we're expecting to see, that we already have seen in day 1 of the convention, but that we could see from his vice presidential selection, J.D. Vance, from Donald Trump himself on Thursday in the aftermath of the events of recent days. Do you think the Republican Party has the discipline to stick to the unity, lower temperature rhetoric that they've said they will?
Oh, I definitely think they do, Kaylee. I think that this is actually for them, if they have that discipline and they can stay in that narrative, in that lane as it relates to what the messaging is coming out of Milwaukee. I think that it is incredibly strong and incredibly powerful. What's interesting, I saw the broadcast last night, and I know you talked a little bit about whether J.D. Vance allows for more of the MAGA messaging from his point of view as the vice presidential candidate, giving Donald Trump sort of a place to rise above and really sort of be sort of a leader and someone that people look to for that unity messaging. It's unlikely that it will happen for the next 4 months, but boy, if he could have that discipline, and it looks like the people around him are really encouraging that, that to me seems like a very powerful position for the Republican Party to be standing from beyond what the incidents of what had happened over the weekend.
All right, Lisa Camuso Miller, former RNC Communications Director and host of the Friday Reporter podcast. Thank you so much for joining us. And back with us around the table now here in Milwaukee, Rick Davis of Stone Court Capital and Jeannie Shanzano of Iona University, our political contributors here at Bloomberg. Just on this idea, Rick, of discipline, knowing that today is Make America Safe Again themed. That's what the second day of the convention is. Crime and the border are going to be the topics. This is something Joe raised with the governor of Alaska earlier. If there was ever a time that they were likely to break discipline, is it on these issues?
Look, I think that there'll probably be some shots, you know, maybe not from the stage because that's pretty well orchestrated. And I doubt if anybody's going to see this as a, you know, political advantage. But look, there could be a hot Senate race in New Jersey. Republicans have a newcomer on the ballot who was not a Trump candidate. And so the question is, do they want to do a shout out to that race, build up, you know, his credentials? I think he's a real estate developer and, you know, he could use some crime credentials. And so maybe they get him here. In fact, he may wind up, you know, doing something from the stage between now and the end of the week because he's now in a primary that some people may think are going to be more competitive.
Well, as we consider some of the more interesting storylines around this Republican National Convention, one we have not mentioned yet was a meeting that took place yesterday between Donald Trump and RFK Jr. Is that going to be the big surprise tonight or tomorrow, an endorsement? Does he drop out of the race? What's this all about?
Yeah, I mean, we heard it was a lot about security and the idea that the Biden administration had not provided, or the Secret Service, the security that many folks thought he should get. He is getting that now. That has happened now. It would be just a fascinating turn of events if he was to endorse Donald Trump, to your point. I mean, that would be a big, big moment for Donald Trump if he was to step aside and do that. We don't know that yet. But even if he was just to speak at the convention, that would be quite interesting as well, because he does have a lot of appeal to many of the people in the room on a variety of issues. And when Donald Trump thought he may be a bit of a threat to him, he has taken him on. But to be here and at this moment and to potentially be talking to voters, that is a good sign for Donald Trump and the Republicans.
So I guess we'll see if RFK Jr. will speak at the convention. What we do know is that Nikki Haley will be speaking there tonight, Rick.
Yes.
If she has her eyes on 2028, what does she need to say to those gathered here in Milwaukee?
I endorse Donald Trump for president and will be voting for him, right? So, I mean, she's left that sort of open. She's endorsed him. She said she'd vote for him. But I think, you know, that's the message she has to get. She has to become part of that movement if she has ambitions into the future of elected office. Look, she'll impress a lot of people tonight. Most of these delegates don't like her. They were against her when she ran against Donald Trump. I think the bigger question is, will they heckle her? How much booing will occur? I mean, Mitch McConnell got booed when he entered the hall last night. So I think the Trump people will try to control that floor, right? A lot of what you do, you'll see the guys with the little hats on run around, not just the red MAGA hats. Well, their job is to control the emotions, get them up when you need them and keep them quiet when you don't. And so this will be the first real test, I think, of whether or not they have control of that floor.
Well, we all remember what happened in 2016 when Ted Cruz went up there and said, vote your conscience. We'll see if we get something like that tonight. Rick Davis of Stone Court Capital and Jeannie Shanzano, Iona University, will be back with us for the late edition of Balance of Power, 5 p.m. Eastern Time, as we work our way up to the prime time portion of the RNC. We'll be joined here in Milwaukee by RNC co-chair Laura Trump, Alabama Senator Katie Britt, Congressman Byron Donalds of Florida. Kaylee, a lot to look forward to.
Indeed. So come back and see us at 5 p.m. Eastern on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for, yes, it's Tuesday, July 16th. Carol Messer, Tim Stenevec. And we kind of sound like a little bit of a broken record.
Yeah, I think that's fair to say. Thanks to upbeat retail sales. More on that coming up this hour. Dow is just surging right now. The S&P 500 is in the green too, but the NASDAQ in the red, Carol.
Yeah, we're going to track the markets for you. All of that coming up. Also, I had a check on banking, and we did get some more quarterly results. You know that this morning. We did get the upbeat retail sales, as Tim mentioned, but we're going to kind of tie it all together. Banking, the consumer lending, we're going to talk about that live this hour. The CEO of Bank of America, Brian Moynihan, joining our David Weston in just a moment.
Okay, I don't know what need to tell you this, Carol. It's an election year. We're going to get an understanding of what happens to markets during election years a little later in the program, too.
Right. Does it matter who is ultimately in the White House come November? We're going to tackle that in just a moment. And as we mentioned, what you need to know about today's upbeat retail sales report and how it contrasts with the surge in car repossessions. That's going to be, Tim, our one more thing.
All that and more over the next hour. First up, a check of the day's trade and some top business stories. Here's Charlie Pellet.
Hi, thank you very much, Tim and Carol. We have got stocks pushing higher. You alluded to the Dow, now surging by 633 points, up 1.6%. S&P also in record territory, up 18 points, up now by 0.3%. It is, however, a very mixed market. NASDAQ 100 index, both retreating. We've got the NASDAQ Composite Index down 0.2%. NASDAQ 100 index down almost 0.4%. Perhaps so the big equity story today is what is happening with small caps, specifically the Russell 2000 index. That index now surging by 2.8%. 10-year 4.17%. The 2-year 4.45%. Spot gold up $42 the ounce, up 1.7%. While West Texas Intermediate crude down 1.2%, $80.93 for a barrel of WTI. United Health Group certainly driving gains in the Dow. It reported second quarter results that topped Wall Street's expectations, even as a key measure of the insurer's medical costs was higher than anticipated. UNH, United Health, up now by 5.7%. So again, recapping, big gains for the Dow, up 1.6%, S&P up 0.3%, NASDAQ down 0.2%, Russell 2000, worth repeating, up by 2.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Also coming up later this hour, we're going to get into J.D. Vance. And what's interesting is increasingly the Republican Party, or this ticket in particular, finding some friends, if you will, among those in Silicon Valley. So we'll get into that a little bit later on.
Yeah, Anna Edgerton joining us from Seattle in just a few minutes. Before we get there, though, let's talk retail stocks, because they certainly got a boost today as the latest read on U.S. retail sales, excluding the impact of that cyber attack on auto dealerships that we talked so much about, rose in June by the most in 3 months, Carol, as sign consumers regained their footing at the end of Q2.
Yeah, and just a little bit more detail. Of the 13 categories that are tracked by the Commerce Department, only 3 registered declines. Those included sales of gasoline, reflecting lower prices in the month. Sales at sporting goods stores also edging lower. So a little bit of context there. What you need to know, we want to get to that now that we've had a few hours to digest that retail sales report. Washington, D.C. Bureau, that's where we go, and to Bloomberg News, U.S. Treasury and Economic Policy reporter Chris Condon. Hey, Chris, good to be checking in with you. What do we need to take note of from this morning's retail sales report, other than it was a surprise to the upside?
Hi there, Carol. Yeah, the first thing, in which you've already noted, is to throw out the headline number. It was distorted by the auto issue that affected auto dealers. The underlying numbers were really good. Ex-autos up 0.4%, and going further, ex-autos and gasoline. Gasoline fell mostly because of a fall in prices, not less demand. Take those out, there's your number, 0.8. That's quite strong, much better than expected, and it finishes off the quarter on a pretty sound note. Now, more broadly, I would hesitate to make any big conclusion about a full recovery of the consumer. The broader trend is or cooling consumption, cooling demand. Obviously, the consumer and businesses are under pressure from high interest rates. We're seeing that across the labor market. So that's going to further erode purchasing power. We're seeing more consumers in some level of debt distress. In a way, I would say the Fed is getting exactly what they want, an incremental, gradual slowing of demand. It's helping to reduce inflation, but not so much that we're hitting some kind of dramatic tipping point. And in the June strong retail numbers kind of reinforced tipping over into a more dangerous period quite yet.
So if you're Fed Chair Jay Powell, we heard from him yesterday at the Economic Club of Washington, Chris, you talk about repeatedly every day how data dependent you are. How do you take this bit of data?
Well, rule of thumb, number one, is it's just one piece of data. They're going to incorporate it into a bigger sphere of numbers that they're looking at. And even within consumption, the retail sales is largely focused on goods. It's not really a comprehensive take on demand from consumers. So they'll take that on board. But I don't think it's likely to deter them from that feeling that they are getting closer to a rate cut. Now, it doesn't sound like they're on the cusp of, say, a July rate cut. There's no real firm signal of that. It does sound increasingly like a September cut is likely. Today's number is, going to reinforce the idea that certainly July is not yet appropriate, but the overall trend, as I said, is moving them closer and closer to a September cut.
It's an interesting environment, no doubt about it. We're going to talk, Tim and I, a little bit later on. Claire Ballantyne of Bloomberg News has a story about car repossessions surging 23%, so rocketing higher in the first half of the year. And it's just another sign of consumer distress as we've seen, either higher interest rates making payments more difficult. So you would say glass more half empty when it comes to consumers at this point?
Yeah, as you say, that's another sign of distress. We're seeing credit card balances ramp up. But, I would come back to the point, Carol, that these are the things that you do expect when the Fed has a restrictive policy in place. And it's not so bad that we're seeing a spike in unemployment or any cratering in overall demand that would indicate a policy mistake has already been committed and that the Fed is going to really have to start cutting dramatically. No, they are closing in. They're not quite there yet, but they are closing in on that soft landing. There will be pain along the way on the margins increasingly. But so far, so good, I think, for the Fed. And pretty soon, I think some consumers are going to start to see some relief, not only in lower inflation, but lower interest rates. How long that takes to feed its way through to lower credit card rates is another question, but some relief perhaps on the way.
Chris, inflation's still not at the levels the Fed wants to see, that elusive 2% at this point. What economic metrics, though, are seeing a normalization? Take into account like pre-levels. Where are we seeing things normalize and where are things not normalizing?
Well, if I'm thinking of the bigger picture here, it's very difficult even to draw some conclusions yet. From the Fed's perspective, they're going to be wondering where do long-run rates normalize. And that is still very much an unanswered question, a question they're going to have to confront in the coming months. They're starting a new, what they call a framework review, and they're going to have to very publicly confront this question. And so far, it does seem like long-run neutral interest rates are much higher than they were before the pandemic. Will they return? Still, like I said, an unanswered question that economists are grappling with.
Well, and it's certainly something, too, those who invest in the banking sector are grappling with, which is where we want to go right now. Chris, thank you so much. Always appreciate it. Chris Condon, he's U.S. Treasury and Economic Policy Reporter at Bloomberg News there in our D.C. Bureau. So let's talk about the continuation of big bank earnings that came out earlier today. Morgan Stanley and Bank of America reporting quarterly results this morning. Both stocks did rally for much of the day. Morgan, though, losing most of its earlier gains, still up just shy of 1%. B of A still up, Tim, about 5% in today's session.
And again, we're going to be hearing from Brian Moynihan over at B of A in just a few minutes. Before we get there, though, let's check in on what these stocks did and what these banks reported. Morgan Stanley, like its rival Goldman Sachs and JP Morgan, beat expectations. It solidified the market's business as a hotspot across the industry. Investment banking fees, Carol, also increased. They soared 51% from a year earlier.
And then B of A, we saw their stock hitting, I think it was a 2-year high during the day after it reported trading and investment banking results that topped analyst estimates. Also gave a forecast for net interest income, very key, and B of A's biggest source of revenue that also exceeded expectations. So let's get to it. Anton Schutz is back with us, President and Chief Investment Officer at Menden Capital Advisors. He joins us from Florida. His RMB Menden Financial Services Fund, by the way, up nearly 16% in the past month, putting it in the 90th percentile among its peers, according to Bloomberg data. The fund up 26% in the past 1 year, putting it in the 36th percentile in this category, again, according to our data. Anton, good to have you back with us. How are you?
Well, it's been busy, for sure. Always a crazy time, and we've added craziness.
Yeah, it's crazy on top of crazy on top of crazy. But let's talk bank earnings, if we may. Morgan Stanley, B of A, let's start there. Investors seem to, for the most part, like what they heard, especially from B of A. Are these results investable? Should investors be acting on these results, in your view?
Well, I mean, I think people have been negative on B of A for quite some time. It's got a very large bond portfolio. It kept talking about the bottom and net interest margin. And here we are. We're at the bottom of net interest margin. They're actually guiding higher. And obviously, as the bond portfolio, starts getting longer in the tooth, the losses on it, get smaller. If interest rates drop, which people are thinking about, again, the losses could, get smaller, maybe potentially even turn into gains over some period of time. So I think, people may have been short Bank of America. And clearly, at this point, there's a lot more comfort in the banks in general. And then, also since the debate, the financials have had a very strong performance because the Trump administration is seen as friendlier towards banks.
Are you buying that trade?
Well,
would you suggest others buy that trade?
Banks.
I guess. I know.
Well, I guess I've said for some period of time to people who are willing to listen to me, which, again, when you're out of favor, people aren't willing to listen. But I've said that, buying my fund is like buying a call option, really, without a cost to it at the time because valuations were so cheap on if Trump wins. And it just going back to November 16, that month banks were up 16%. Now, there was a tax cut in the offing, but from a regulatory perspective, I think, deals getting approved. Again, people expect that the administration will be friendlier towards M&A. And clearly, M&A has been way down in the space.
Anton, I love asking about the consumer. Carol knows that I sound like a broken record, but one of the reasons I love hearing from Bank of America is because they have such a good eye on what the consumer is doing, how the consumer is feeling. We just talked retail sales. We're going to talk a little later about auto defaults. What idea or what picture of the consumer did we get from Bank of America earnings today?
Well, I mean, we got a pretty good picture. I think they're not going down the food chain into the subprime space because I think that consumer in particular is hurting a great deal. I think the stimulus money's gone. I think the employment picture is getting tougher for them. Inflation is biting hard. So I'm negative on the subprime consumer. And I think if you look at the, sort of the middle income part of the population, I mean, you can see in restaurant statistics that sort of the full service restaurants are sort of struggling to, gain that consumer. You've seen even some of the lower end stuff like Red Lobster, getting in a lot of trouble.
Yeah, exactly. All right. So, B of A, we had Morgan Stanley today, but wrap it up for us. We had Goldman Sachs yesterday, and I know you do focus on kind of the smaller mid-cap names, Anton, but I do appreciate your insight when it comes to some of the big cap names. JP Morgan, of course, last week, Citigroup, and Wells Fargo. Are there any trends, takeaways in terms of the overall banking sector, what we're seeing in lending, some of the commentary, what it kind of says about this environment right now?
All right, I'll take up the rest of the show now.
All yours.
Yeah, really, I mean, look, first of all, the one thing we didn't see was credit problems. And everybody keeps harping, boy, we're going to have all this trouble in the banking system from real estate. And, they've reserved a lot. And, we're seeing losses. Bank of America actually said commercial real estate losses will be lower in the second half of the year. Fascinating, right? Secondly, loan growth is slow. Right? We got a slowing economy. We just talked about it. You had an economist on, economy's slowing. I think the Fed is behind. I wish they would get started. But September appears to be in the cards, but they need to get going. The economy's slowing. There's no loan growth. So what do banks have? If there's no loan growth, earnings are fine. Capital grows, back stock. Maybe they start buying each other. That's what happens when you don't have any loan growth. And credit quality is fine. I mean, they've done a nice job. They've been very conservative, really, since COVID. And this is not 2007 and 8. And I keep saying that, but it's not. It's not showing up.
Well, why do you think the Fed is behind?
Because there's such a lag to them moving rates, right? When they raise rates, it takes a long time for it to take effect. When they lower rates, same thing. It's not like 25 basis points is going to change anybody's economic behavior or viability. So, my guess is they tiptoe and give us 25s for a while, but that's pushing on a string early on. So it takes time for all those effects to take hold, for financing to become more attractive for people to be able to refinance or invest in new projects. So, yeah, they've got to get going if the economy's slowing.
When does it start to concern you that they haven't gotten going yet?
Well, I mean, I'm already concerned. I think they're already late. If you think about unemployment, I mean, where do we bottom? 3.4. We're at 4.1. And if you look at different statistics, things like the household survey, the numbers are not as rosy on the employment side. So I think they've got work to do.
I do wonder too, Anton, when you look at the space, what is your favorite, first of all, big bank, what's your favorite other bank, if you will, in the space?
Okay.
And why? Yeah.
All right. Well, I've always loved geography. So again, I'm going to talk about the Southeast and Tennessee. So First Horizon, it's a pretty good sized bank, right? It's just under 100 billion in size. They had agreed to sell the TD years ago. The deal got scuttled. TD got in some trouble. I think that company is doing well fundamentally. I think they're in great markets, and potentially someone else could go, I'd love to be in those markets as well. So I think operationally they're great, and I think fundamentally they're attractive. So, if you go down the food chain, and I think I may have talked about it before, but First Bank in Mississippi, they're in Georgia and Mississippi and Florida. So, two states that are really growing well. And Mississippi, by the way, has a lower unemployment rate than Texas.
First Horizon, by the way, is one of the top holdings. It's number 9 in your fund. It's about 4% of your fund. Anton, what about banks that you want to stay away from? You said, well, correct me if I'm wrong, but I believe you said that we might still see some shakeup in some of the regional banks when it comes to real estate. So
sure.
Yeah. So which ones do you want to avoid as a result of that?
Yeah, I'm not seeing a lot of failure. So first of all, let me not say that you should go out and short a bunch of banks that have a lot of real estate exposure. But there will be some losses. Things like life sciences, right? That was a hot area to lend into. It's not a good area right now. So people who have exposure to things like that, are at risk. If you saw some downgrades on things like Bank of the Ozarks a month ago, I mean, interesting earnings to look at. I really respect the CEO, but he's got a lot of real exposure to things.
In terms of what the Fed does or doesn't do, do you think, we've been talking a lot about politics, and are you concerned that the Fed gets caught up in some of the political environment and maybe doesn't do, as you said, I think that they're already behind the curve. Are you concerned that they get caught up in that and maybe, don't move as fast as they're already behind the curve according to you. So do you think they kind of get caught up in that?
Well, I think they had gotten caught up. I mean, I think they acted a little late in raising rates. I think Chairman Powell was waiting to get reappointed. So that transitory thing on inflation was bad. President Biden has promised a rate cut, some months ago, so the Fed is going to cut rates. Well, there's a little bit of pressure. He hasn't said anything lately, but, at this point, he's behind in the polls. A lot of the people at the Fed have been appointed by him. So we can say the Fed's not a political organization, but, certainly people are going to have some loyalty to him, and he's behind in the polls. So I suspect there'll be pressure on the Fed to cut rates by the administration if we get any more bad economic statistics.
Anton, one last question. We're getting ready to hear from the CEO of Bank of America, or David Westing, sitting down with him in just a moment. What would be your top question to him? What's top of mind for you?
Well, look, I'm a big fan of Brian Moynihan's. I mean, it was just amazing watching him take the reign after the financial crisis. So, the big question is what's next, right? He can't grow the company anymore from a depository perspective. What other lines of business would he like to be in? Does he want to continue to build out, the wealth management product? Does he want to continue to build out, other lines of business. And by the way, how is he using technology? Because technology is going to be the biggest driver of efficiency ratios in this industry. AI is enormous for anybody that has all those back office jobs like the big banks do.
All right, going to leave it on that note. Around the world of banking we went, as we always do. Anton, thank you so much. Be well. Have a good summer. Anton Schutz, he's President and Chief Investment Officer at Menden Capital Advisors. We've been talking about Bank of America, which has definitely been rallying in today's session. It's up about 5.5% today, hitting its highest level in more than 2 years. Tim, the stock is up about 31% so far here in 2024.
Yeah, the company reported trading revenue, excluding DVA, for the second quarter that beat the average analyst estimate. Its investment banking result, Carol, also coming in better than expected.
And as a result, we are seeing actually all of the banks trend higher in today's session, really some outperformance. The KBW Bank Index right now up about 2.8%. Right now, let's get more on the banking world. We turn to the host of Bloomberg Wall Street Week. We are talking, of course, about David Weston sitting down with Bank of America CEO Brian Moynihan, now on Bloomberg Television and Bloomberg Radio. David.
Thank you so much for our Bloomberg audiences worldwide. I'm David Weston. Joining us now is Brian Moynihan. He is the chair and CEO of Bank of America. So welcome. It's good to have you on earnings day, Brian.
That's great to be here, David. Good to see you again.
So let's start with lending, which is so important to Bank of America, really a leader in commercial lending. And net interest income is something we've been talking about an awful lot. You had said it would be a trough in all likelihood second quarter, coming back fourth quarter. But I'm curious about when you look at it, what are the things driving that right now, up or down? Is it loan demand? Is it the cost of deposits? What are the things that are feeding into that right now?
Yeah, so I think, make it straightforward. We have $1.91 trillion of deposits, and we have about $1.05 trillion of loans. And so the money we earn on spread, net interest income, is the difference between what we deposit rates paid, loan rates received, and then ultimately investing in cash, the other $800 billion we have to invest. So first, what's driving demand, I think, is actually an interesting thing. So if you look across the loan categories, credit card growth was decent. Home equity growth is kind of bouncing along because consumers aren't using their home equity loans yet. They may. Mortgage lending activity were relatively flat there. You go on the commercial side, the great news is we grew small business and business banking, which is our $50 million segment. It grew for small business for the 20th consecutive quarter. We're the #1 small business lender, despite what you hear. We are the largest small business lender in America, and that grew, which means there's activity. But when you get into the middle market and the upper end, you start to see there's a little of softness in loan demand because of opportunity and cost, to be your point. The cost of borrowing is higher, and the opportunity what to do with the money with economic uncertainty is higher. But you put that together, we believe that NII would trough this quarter. We called that. We showed a bridge that where it goes from $13.9 billion this quarter to $14.5 billion in the fourth quarter, and we showed the steps to get there, which I think gave the market confidence that part of this requires a little bit of growth in loans and deposits, continued discipline and pricing, but a lot of it comes from mechanical repricing of assets that are rolling off their fixed rate and having them repriced to current rate structures.
Yeah, and those mechanical things you're reasonably certain of as much as you can be. But when you talk about growing, for example, small and medium-sized business loan, is that what I would call organic growth? Is that more customers, or is it current customers actually borrowing more?
Well, it's both, but it's probably weighted in the small business area to more customers now. In the middle market area, it's driven a little bit by line usage, the percentage drawn on the line on average, and that's our average loans. And so in small business, we're adding customers. In middle market, we're adding customers. And in large corporate, really people don't use their lines much in the markets being strong for fixed income underwriting, take the assets away from us. So it's across all that. So if you look at small business, our activity, i.e. new borrowers, is high. We have a big practice lending to dentists and doctors, and that's been growing pretty well. And we have just the general small business credit card, which is to use to do their operational stuff, a business credit card in small business. You can see that growing. But middle market line draws are basically relatively bouncing around at the level that is still about 5 percentage points below where it was pre-pandemic, which means that as cost of borrowing went up, people aren't being quite as aggressive, and that's why the economy is slowing down. They're not hiring quite as many people. They're not buying that piece of equipment. They're not doing it because they're a little worried about final demand, and therefore they're being careful, which is unpleasant for your bank, but is okay because the companies don't make them profitable and the credit quality is good.
Yeah, and the Fed needs to slow it down a bit given where we're of inflation. At the same time, from where you sit, because you have such a vantage point into this, is that a straight line that's going down? Do you see it leveling off, or is it?
It's a flat line. So loans grew first quarter, second quarter. a few $1 billion on a $1.05 trillion base, so say $8 billion. So they grew a little bit. All the business lines grew loans, but the wealth management business grew faster, which is good because wealthy people, as their asset base goes up, tend to use it to do something a little more faster than a corporate might. There's not a lot of leverage finance going on. There's some, not a lot, because deals at higher prices and multiples and getting it all straight. That'll work itself through the system, and you have a lot of people on your show who are private equity colleagues that they're sitting there saying, I've got lots of money, I can't find the deals at the right price. That's the key, at the right price. I can find deals, and so that's a little bit muted. But if you look across the board, it's solid, growing a bit, but growing consistent with the lower growth, 2% type growth, lower inflation economy. It's not growing as fast as it was coming. The pandemic shot up, went down, and it started growing faster. Same with deposits, went up and drained down. They're stable. The activity is kind of normalizing now, and that's where I think the risk of the next turn in the track is actually getting the timing right to bring the rates down to create a little more accommodation in the system or a little less restriction.
What are your projections on the rate cuts?
Our company's projection, our research team, which is terrific, Candace Browning, Platinum Research Team, best research team in the world, has really won this year. They had just in their last report said we're probably going to come off of that. So like they usually do, I get on TV, the next day they change it. But the market's at 3, we're at 1, somewhere in that was where they'll come out, is my guess. But
maybe more important than that is, where do you think we end up? Because that's the question. We could do it this year, next year, but where's the long-term interest rates going to end up?
So if you think of across time here, that's what's important, is that our teammates think that we end up around 3.5. And that's where the Fed stops. That is a wholly different environment than the last 15, 20 years, where basically there was no interest rate, got up in 16, 17, 18, 19 to 2.5, and then it was cut, if people forget, at the end of 19. We never got back to, quote, a normal rate environment that you would have seen in our early careers for years, David, where the Fed funds was 3.5 or sometimes even a lot higher. 10-year rate was 4.5. That normalized rate is where our teammates think it gets to. And Candace and her team are saying, look, they bring inflation down and then they'll stop because the core underlying growth dynamics, the amount of money in the system, the fiscal borrowing that went on is still being deployed. The IRA, the Infrastructure Act, all this stuff going on is going to still be coming through the system. A lot of it's not spent yet; it's being spent. That will create tight demand and things like that. Therefore, there's probably going to be a little more inflationary pressure. But it would be good for America if we ended up with a more normal rate structure in a growing economy. That 3.5 didn't become too restrictive. That would be good because that's a much sort of healthier place for us to be over time.
At the same time, if 3.5 is where we're ending up, let's assume that for a second, that suggests that where the Fed is now is maybe not as restrictive as some people think it is.
Yeah, I mean, there's great debate about R-star and the natural rate, the long-term rate, which the economists can go on, but I think they're restricting. When you hear from clients, they're saying, hey, it's costing me, what used to cost me, 200 basis points over 50 basis points or 300 basis points over 50 basis points, 3.5% is now 300 basis points over 5.5%, 8.5%. They're like, so it has a restrictive effect. They've got to slow that down, and that's why you're seeing the borrowing demand come down and deployment of that borrowing. You're seeing consumer movement of money in our franchise come more consistent with a lower growth, low inflation economy. All that is going on, and that's where the next turn in the track is a trickier one. They've put inflation on the right path. What's the debate about too far or not far enough? And that's going to be what the market's going to ebb and flow on a given day.
So what about the cost of funding for you for your deposits? Because you have to spend
203 basis points.
But I read some accounts that in some places people are rotating, as they say, into higher yield products, which cost presumably Bank of America and others more money. Yeah. Are you seeing that rotation? Do you see it tapering off or ending?
So we showed some pages today. It depends on the business and the use of money. If you look at the core consumer business, the rate paid really reflects a huge amount of non-interest checking as a percentage. So it's a mix of what the customer uses the money for. You go in the investment business, we're still seeing a little bit of rate increase. You go in the client business, the banking business, global banks, corporate customers, basically the quarter-over-quarter change is next to nothing because it basically priced up to the difference between it and the Fed funds rate and sitting there. So it really is business and how the customer is using money. We sort it by transactional money and investment money. And then if the customer is in transactional money, that money is moving around. They don't see it. In investment money, they're making a discrete decision. Do want to leave it with you or do want to put it in a money market account? And that's where you saw some of the movement happen. And that's what's been going on in the wealth management business. Across all our platform, deposits have grown for the last 4 or 5 quarters, ever so slowly, which means the stability in pricing is there because the rate increases linked quarters 10, 12 basis points, which is really just a little bit of mixture.
You have a unique perspective on the consumer, U.S. consumer. Give us your take right now on the consumer. I see in your numbers you're taking more provisions than you were. You have more charge-offs. Do you see that continuing?
So if you talk about it from a credit standpoint, the credit card charge-off rate for cards was like 3.88, I think, this quarter or something like that. We underwrite to stay under 4.5 in normal times. So the point is that it's just been coming back up to the level that it was in prior periods. It's a little bit higher than it was in 19, but that was like a 50-year credit low in the company's history. So it's normalized, but the rate of increase is interesting. Year over year, I think it's up 80 basis points, or it's everybody's like, oh my gosh, but it's just getting back. So what we showed today is that we showed the early stage of delinquency, what they call 5-stage, or 30-day delinquency and 90-day delinquency, have basically flattened out, which means the second half of the year, you'll see the charge-offs flatten out, which means we've reached normal 4%. So from credit, they're doing well.
We haven't mentioned trading. You had quite a report on your equity trading. You're really doing terribly well. What do you do to keep that going? Are you going to invest more in it?
We continue to invest along 3 dimensions. Technology, Jim and DeMar and the team run it, and they've done a great job. And so 5-7 years ago, we made a decision to give them more capabilities. Technology, the balance sheet that they can use to help their customers achieve their goals, and talent. And so Jimmy across the board continues to increase. And so we feel good about it. He made $1.4 billion after tax this quarter, which is a very strong earnings quarter. But what's happening is you're seeing back-to-back $1 billion-plus quarters. We're used to be $1 billion plus and dropped to 500 when the market slowed down. You're seeing much more stability. The break-even point in the business is, on a relative basis, much lower. The best second quarter they've had since, I think, 2012 or something like that, which a lot of that was just when assets were marked up and came back through the system at profit. They've done a great job. And Tom Montag, 6-7 years ago, started this. Jimmy took it over, has done a spectacular job of implementing it, and we feel confident. We'll keep giving them more RWA, risk-weighted assets, balance sheet, capital, and investment in technology, because that's obviously very expensive business to run from a day-to-day basis.
Brian, I know you want to grow all the business of Bank of America, but do you have a strategy about the balance between what I would think of as a traditional bank lending interest receipts as opposed to the fee side, whether it's investment banking or asset management? Are you rebalancing the bank?
Well, this quarter happened to be half the earnings were from people, half the earnings for institutions. Out of the $25 billion of revenue, 14 was spread revenue, and 11 was, round numbers, was fee revenue. Because the market dictates a lot of the fee revenues, we could do it. But if you think about it from the businesses, in a consumer business, we made a decided decision to lower fee burdens on customers, and the trade-off for that was long-term customer favorability, running 88% across all the platform engagement places. Brand favorability in the 70%, up 20 points over the last 10 years. So we made a decision, lower the fee burden, but get it paid back in transactional accounts. Those are zero interest deposits. That's worked wonderfully. So we grow 1 million accounts a year. They start at $2,000 or $3,000. They mature to $7,000 to $10,000. It's all zero interest rate money. It's very strong, and that's, if it's a young kid, it's a customer of the future, and that's what we're doing. So that balance in fees there. In wealth management, it's all going to be about fee-driven. But the incremental growth, 7% increase in fees year over year. That's what we're driving there. Jimmy has a mix in the trading business, and then the commercial business is actually balanced. Investment banking fees, which everybody talks about, $1.6 billion, but the whole revenue in the business dominated by lending and deposits for corporate customers. So you have to keep your heads on. We never say if it's this we're happy, if it's not we're happy. We want to grow all aspects of it.
Brian, thank you so very much. That's Bank of America's Brian Moynihan.
All right, David, thank you so much. David Weston there with B of A CEO Brian Moynihan. Looking at B of A shares up about 5.6%. One of the headlines out of that interview with David is Brian Moynihan saying that B of A is adding customers in small business and in the mid-market space, Tim.
Yeah, also saying that there's not a lot of leverage in finance going on. And, one of my favorite commentary about the consumer. He said that the U.S. consumer is doing well, at least from a credit perspective. So some insight in from the consumer there, at least what B of A is seeing.
Yeah, it helps us pull together the overall picture. All right, folks, keeping a watch on the banks. They're definitely outperforming broadly as a group today. Let's get an update on the overall trade. For that, let's head things back over to Charlie Pellet with the Bloomberg Business News Flash.
Hi, thank you very much, Carol Master. Indeed, just under 90 minutes to go until that closing bell clangs on Wall Street. Big day for the Dow Jones Industrial Average. average up 667 points right now. That is an advance of 1.7%. S&P up 21, higher by 0.4%. NASDAQ, though, in the red, down 0.1%. NASDAQ 100 index down 0.3%. The big story, though, the surge again today in the Russell 2000. That index of small cap shares now higher by 3%. Your 10-year, 4.16%. The 2-year, 4.44%. Spot gold now higher by $40 the ounce to $24.62, up 1.7%. And a retreat for West Texas Intermediate crude down 1.7% now, 80.63 for a barrel of WTI. Bitcoin, meanwhile, with a $64,000 handle, 64,777 on Bitcoin, up by about 1.6%. Briefly, we heard from Bank of America CEO Brian Moynihan. That stock ripping higher after earnings, up 5.7%. Morgan Stanley after earnings, up 1.8%. Tough day for Schwab after earnings. That stock now down by 8.75%. So again, recapping, big gains for the Dow, worth repeating, up 1.6%. To put that in context, we've got the S&P up 0.4, while the Russell 2000 now higher by 3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Much appreciated, Charlie Pellet there. Well, J.D. Vance, former venture capitalist, albeit for a brief period of time, also critic of big technology, AI fan, or I should say also fan of FTC Chair Lina Khan and the Biden administration's tech-focused antitrust enforcement.
Okay. Okay, so that's a little, not sort
Maybe
of
at odds?
conventional.
Yeah.
Yeah. Now, as you know, Donald Trump's vice presidential running mate, and with a backing of some in Silicon Valley, which has long been a liberal bastion nestled in California, a Democratic stronghold with roots in deeply progressive San Francisco.
All right, so let's get to this story. Great story by Bloomberg's Lizette Chapman and Anna Edgerton. Anna is Bloomberg News Seattle bureau chief, joining us from Seattle. So great to see you and talk with you. Anna, tell us what it seems to be a growing Republican contingent within the technology world that continues to become more visible and more visible. We've heard a lot about Elon Musk supporting Donald Trump over the years, also Peter Thiel. There are others. Who are they, and why are they kind of increasingly stepping up to support the Republican Party?
Yeah, we're seeing kind of scrambling of ideological lines on so many different levels that it's hard to even talk about it on a spectrum at this point. But, from an ideological perspective, you have some conservatives like J.D. Vance, like Senator Josh Hawley, who have kind of embraced this like neo-Brandesian antitrust movement that is, Lina Khan at FTC, Jonathan Cantor at DOJ, using existing antitrust laws about as broad as they can go to prosecute big tech companies that don't really fit the tradition, the definition of a traditional monopoly. So, those cases are working out in court, but this kind of school of thought is percolating throughout the rest of politics, and we see that with this selection of J.D. Vance. It's also interesting, as you mentioned, coming from Silicon Valley, because he's been very critical of like the Googles and the Metas of the world, but seems to kind of more align with this like American dynamism, like venture capital interest in the emerging technologies that are going to do more than just make money by attracting our eyeballs, to put it bluntly.
And as Silicon Valley has, as Carol and I were talking about, has been, and you guys write about, has sort of been this bastion of liberalism in San Francisco. But at the same time, there has been a thread for years of libertarianism running through it. And I'm wondering if we're starting to see that thread of libertarianism grow in Silicon Valley, or if it's just becoming more vocal at this point.
Well, and that's what's so interesting about this, is because J.D. Vance and kind of that camp don't fit the definition of like libertarians, because they're not anti-government intervention. Supporting Lina Khan and her efforts at the FTC is a very heavy hand in government and kind of the functioning of capitalism, and whether mergers and acquisitions get approved or whether they're challenged after the fact. So it's going to be really interesting to see how this campaign plays out, especially the contrast with the Biden administration, and then if this ticket were to be elected, what an administration would look like. Is there a Lina Khan ally that that they named to the FTC? Is there kind of a conservative flavor of what we've seen from the Biden administration? So this is going to be very interesting space to watch.
Right, and I think about perhaps the conversation between, the presidential candidate, Donald Trump, and his vice presidential running mate, where they could maybe be at odds at certain things. I am curious how this has translated into dollars specifically, Anna, when it comes to the Trump campaign.
Yeah, definitely we've seen the choice of J.D. Vance bring on a lot of new money for the Trump campaign. Elon Musk has pledged to donate to Trump-aligned PACs, also to the GoFundMe fund for the victims of Saturday's attack at the Trump rally. And we've also seen other Republicans, other Silicon Valley people say that they're going to align. David Sachs, when he hosted a fundraiser for Trump in San Francisco, really credited J.D. Vance kind of bringing those communities together and being that bridge between the Trump campaign and Silicon Valley.
What happened in Silicon Valley? What changed in the last 8 years or so? I remember an article in The Nation back in 2016 that called Obama Silicon Valley's president. I mean, this is a guy, Obama, that is, who there was chatter of him becoming a venture capitalist after he left the presidency back in 2016. What shifted? What changed?
That is a very philosophical question. I think we would have to have a longer conversation about that. But I don't know if it's just kind of the natural business cycle of an industry going from almost being like an upstart disruptor at the during the initial Obama campaign to being more of an entrenched force in the U.S. economy, or if it's kind of more social factors that are at play. It's a really interesting space.
Yeah, and I do think it's interesting, and you kind of talked about this before, that it does feel like, Anna, that as this race goes on, and maybe it's no surprise, that there is, some division, if you will, between the startup community and whether it's the venture space versus kind of the tech establishment, whether it's Apple, whether it's Alphabet, whether it's Microsoft, whether it's Netflix, whether it's Amazon and others. I also think those publicly held companies are often, nervous about wading too far into politics because they can tick off some of their shareholders or some of their customers. It gets a little tricky.
And their employees.
And their employees. So, but I do feel like we're getting kind of somewhat of a division in terms of who's backing who among the political parties.
Yeah, Trump has been the great scrambler of American politics and kind of the ideological spectrum. So I think, as this campaign really moves into the next phase running up to November, we're going to see even more of that, especially with some of the reaction that we're going to get from Wall Street, the different reaction we're going to get from Silicon Valley, and kind of how this percolates throughout the economy.
So, we talked a little bit about the sort of strange bedfellows here in the context of Lena Khan and his public comments, J.D. Vance's, that is, recently about her supporting her. There's also backing legislation with Elizabeth Warren, as you and Lizette write about, and then teaming up with Democratic Senator of Ohio, Sherrod Brown, as well. Talk a little bit about J.D. Vance's alliances across party lines a little bit.
Yeah, and this is where, you kind of question how attractive his policy positions would be to a traditional libertarian, because he has made these alliances in his short tenure on the Hill. And there seems to be kind of a through line in a rejection of what he's called in the past the financialization of the U.S. economy, where kind of the forces that are moving money around and not really producing anything, again, providing capital for companies that actually produce something. But, when all of the gains are going to finance and to kind of the investors, that seems to be the thing they're trying to address. And you can address that, from what we're seeing now from the political right and certainly from the political left. And so I think that's where this is really going.
Yeah, I just want to jump in here, though. At the same time, you do have the support of J.D. Vance and Donald Trump from the wealthiest person in the world, being Elon Musk and many other folks who are billionaires. So it's a very interesting dichotomy, Anna, that's
Elon
playing
Musk,
out.
Earned his, all of his money comes from the companies that he's created. It's not from being, the investor sitting in New York investing in other companies.
Right.
So I think that's where the difference is. at least in that case.
Well, like we keep saying over and over again, it's already a really interesting political race. Anna, great to check in with you. Thank you so much. Anna Edgerton, she's Bloomberg News Seattle Bureau Chief, joining us from Seattle. All right, let's get back to the trade.
Yeah, we got with us Charlie Pellet for an update on what's happening with markets and, of course, business news. Hey, Charlie.
Well, hello there indeed. Lots of moving parts to this U.S. stock market. Right to the numbers here. We got fast-moving markets. Look at NASDAQ. Right now, the NASDAQ Composite Index back in the green, higher by 17 points, up by about 0.1%. NASDAQ Composite Index now at 18,487. We are on track for a potential record close there. S&P at 5660, up now by 29 points for the S&P 500 index, up by 0.5%. The Dow up 671 points, up by about 1.7%. United Healthcare after earnings having a lot to do with that. UNH right now up by 6%. The Dow worth repeating up 670 points. But perhaps the biggest story of all in terms of markets today, the continuing ongoing surge in small cap shares, with the Russell 2000 up now by 3.1%. Your 10-year, 4.16%. The 2-year, 4.44%. Spot gold up 1.8%. 24.65 the ounce right now on the precious metal, while West Texas Intermediate crude down 1.5%. WTI 80.72 a barrel. Tesla looking to hire nearly 800 new employees 3 months after CEO Elon Musk hastily ordered the largest round of layoffs in the company's history. Tesla taking part in the rally today. Tesla up now by 1.7%. So again, recapping, S&P pushing higher by 30, on track for a record close, up 0.5%. Russell 2000, not going to ignore that, up now by 3.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Yes, indeed, and pretty broad-based buying. You're looking at most names in the S&P 500 higher in the Tuesday trade.
I pity anyone who has to do decliners today, Carol. That's all I'm going to say.
Sorry.
Oh, wait, that would be me.
That would be you. You already said, I can't find anything.
Yeah, I got a few names. I'll pull some rabbits out of my hat.
You always seem to. All right, let's talk a little bit more about politics, certainly front and center. Donald Trump, of course, as you know, made his first public appearance since an assassination attempt. That was last night. White bandage covering his right ear as Republicans gathered to nominate him as their presidential candidate for a third time.
We didn't hear from the former president, but the through line of his populist doctrine was evident, from tapping Ohio Senator J.D. Vance as his running mate to the spate of speakers, which range from business executives to the head of the influential Teamsters Union. We even heard from David Sachs, the venture capitalist, who we were talking about a little earlier.
A broad spectrum of speakers. So what will the race and run up to the November elections mean for investors short and longer term? To tackle that, with us is Kara Murphy. She's Chief Investment Officer at the Registered Investment Advisor, Kestra Investment Management, joining us right here in our studio. Kara, welcome.
Thank you.
Nice to have you here. Nothing going on.
Yeah, very quiet.
It's very quiet. Hey, remind us, we often, we'll talk about this, some of our Bloomberg Market write-up stories or write-ups on the markets. We'll talk, remind everybody about kind of historically what happens in a presidential year. Remind us a little bit about that.
Well, number one, there's always a lot of fretting, a lot of hand-wringing, a lot of worrying. But what's interesting is that when we actually look at market performance in years when there's a presidential election, the annual return is remarkably similar to non-election years. But the way that we get there is a little bit different. And typically what we see is a kick up in volatility late in the summer prior to the election, and then markets sort of take off before the election actually happens. So we've been counseling people to be aware of this. It can still be a really good market environment, but it can be a bumpy road along the way.
It hasn't been that bumpy over the last
You're right.
18 months.
And so this is where we also have to be cautioned, because this year is so different in so many different ways. And I think part of the reason why markets have been able to rally in the first half of the year is because I know it doesn't feel this way, but there's actually much less uncertainty going into this election than what we normally have. Especially
Meaning what? Meaning what
specifically?
After,
yeah, and especially after a weekend like we just had, that sounds weird. But we have two former presidents who are running against each other. We've never had that before. So the two presumptive candidates, we know what they do in office. We know who they surround themselves with. We know that what policies they favor. We've actually never had that level of policy certainty going into an election. So from a market's perspective, that's actually a good thing.
Do you believe, though, as someone who has to advise investors, that a second Donald Trump term would be just like his first term?
So that's always a big question. And again, just because he served 4 years doesn't mean the next 4 years are going to be exactly like it.
It's fair to say, and this isn't being political, but he's not your standard political candidate.
He's also a lot of the people who were in his universe in his first term are, no question, out of his universe forever.
Right, what people have been calling kind of the guardrails in that first administration.
But we also see, I mean, even in a Biden administration or other administrations, you tend to see every couple of years a big turnover in terms of the personalities around a president. We also have this wonderful thing in the United States called political institutions, which themselves provide guardrails and limit the amount that any one executive can do.
But you have a potential president, meaning Donald Trump, who says he wants to undo those institutions and take away kind of the structure that has been entrenched, and in many ways, the checks and balances throughout the government. So how do you kind of think about that?
And I think that is a very real challenge. But as we've looked through, we're still relying on Congress to make policy. We're still relying on courts to make judgments. And we might disagree with what those are, but we're still working through that system. And so I'm not calling the end of the American institutions just yet.
What do you see as potentially inflationary about another Trump administration? We've talked a lot about this, the idea that he is interested in raising tariffs. There are some questions about other policies that would actually be inflationary. How are you thinking about that?
Well, I think when we look at both potential administrations, both have potentially inflationary policies. And so for Trump, it's more along the lines of tax cuts and tariffs, which, you know, in some ways the market likes, right? The market likes when companies pay fewer taxes, but can actually be inflationary. So I think those are components to a broader picture, but there are certainly broader economic forces that'll play into inflation than just policy.
So what do you tell investors when someone comes and says, Kara, okay, I want to put some money to work. Do I play it safe, keep it in cash right now and wait to see what happens? What do you say?
I think if investors play it too safe, they risk missing a really good market environment. So what we would say is diversification is still your best friend, right? You don't have to own just a handful of companies. You can diversify, whether it's smaller cap names outside the US, bonds. So there are a lot of different ways that you can still be invested, enjoy a good market environment, but without being so beholden to just a few names.
Would you play the Trump trade right now, which is everybody was kind of jumping on? And I think Tim and I talked a lot about this, of being like a little careful one day. We still have a few months to go before the November election, but whether it was prisons, gun stocks, crypto.
Yeah, those were all higher. We had oil stocks. We actually had clean energy stocks and green stocks move lower yesterday. So it's like the classic Trump trade.
So I think often when we look at policy baskets in previous presidential elections, they haven't been very easy to trade. You'll have these little blips where those types of companies outperform, but then they kind of come back down to earth. So I'm actually not a big fan of playing individual stocks because, as you pointed out, there's also a lot of policy uncertainty, even with two men who have already served as president.
Well, a lot of the policy uncertainty comes from what happens in the House and Senate, because you know, we talked about the idea of gridlock. And if there is a mixed Congress, or if the president is one party but Congress is another party, then you could see gridlock. How do you think about that?
The market usually likes gridlock. They usually like Washington not being able to get a lot of things done. So that's not a bad scenario.
But what's the scenario that you're playing out right now?
So we're looking beyond the election. We're looking at where we think the U.S. economy is going, and we think that the U.S. economy is slowing, but in a good way. Inflation is coming down. You have the boost of the Fed rate cuts, and I think that actually is a much more important driver of the market than who's going to be in the White House in January.
Kara, okay? So it sounds like you look through who is ultimately going to be in the White House.
We do.
What's the risk, though, in looking through and missing something that could be dramatically different?
Well, there are a lot of risks, right? So as an investor, you're always waking up at night thinking about different potential risks. But I think the biggest risk that we face is something that's more intrinsic to the U.S. economy, right? So maybe the Fed doesn't cut enough and rates stay too high for longer, and we start to see, let's say, a crisis in commercial real estate. So I think those are much easier to kind of identify and then also hedge against, rather than some huge policy mistake that ends up coming out of the White House.
You mentioned commercial real estate. What else do investors have to have on their radar that could be on this bumpy road that you alluded to?
So the other thing that we focus on a lot is the Mag 7, right? That's all anybody's been able to talk about for the last year and a half. And what we have found is that portfolios have become increasingly concentrated in just a handful of names. And then you end up being very over-levered to things like mega cap and growth. So a lot of people who think they're very core actually aren't necessarily very core.
So does that make it a prime time? I mean, we talked a little bit about geographic diversification, but the U.S. has outperformed global stocks for years at this point.
Yeah,
When is there going to be opportunity outside of the U.S.?
That's the golden question.
I mean, if there's so much concentration risk here in the U.S., then it sounds like you're saying no.
Well, we think it's always important to have, non-U.S. stocks in your portfolio, but it becomes harder every year that the S&P outperforms.